Should I play the motor song?
Yes, sir.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तदेव शुक्रद ब्रह्मा तद ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चनात्यति कश्चन एतद्वैता 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 एतद्वैता.
Thank you, Pranav, for playing that. With this, we move on to today's session on analysis of direct tax provisions of Finance Bill 2022. As many of you would be aware, this was one of the shortest budget speech which was being delivered. However, in the fine print, and as Pradip was mentioning the other day, there are as many as 150, 175 amendments which have been carried out in the finance bill. So it is not as what is being displayed. And while the market and the other participants have well received the budget, saying that no bad news is a good news, and that is how the budget has been received. And with this, we have Pradip Bhai, who has been discussing and analyzing the budget for Matunga Study Circle ever since. And while I may not be wrong to say that Matunga Study Circle budget session and Pradip Bhai are two sides of the same coin, and that is how it has been going. I would now, while Pradip Bhai requires no introduction, at least in our study circle, everybody is well aware of him. He is one of the very core members, very senior member of the study circle. For everybody's and for the new people who have been becoming members of our study circle, would want to introduce Pradip Bhai. Pradip Bhai is a chartered accountant and a law graduate from the Government Law College. He leads the chartered accountancy firm Pradip Kapasi and Company, which is based out in Matunga, Mumbai. He is the past president of the Bombay Chartered Accountants Society, BCAS, as well as the Chamber of Tax Consultants, CTC. He has co-authored several professional books, including Taxation and Accounting of Shares and Securities, Search, Seizure and Survey, Taxation of Firms and Partners, International Taxation, on Law and Taxation of HUS. He is also a regular contributor of articles in professional magazines and various newspapers, such as Controversies in BCA Journal, the Economic Times, the Income Tax Review, the Chambers Journal, the AIFBP Journal for Tax Professionals. He is also on the editorial board of the Chartered Accountant Journal of ICI, the Chambers Journal, and has been discharging editorial functions ever since. He is also a regular trekker and is fond of traveling, and with his team engages in a lot of social and charitable work through a small initiative, Prayas, to winter warmness drives in tribal areas of Maharashtra. With this little introduction of Pradip Bhai, I would now request Pradip Bhai to take charge of the proceedings from here. Pradip Bhai, over to you.
Yeah. Very respected Rashmi Bhai Zaveri, our chairman, a permanent chamber in absentia for always for these study circle meetings, especially on finance bill. The directors Rajendra, Jiten, the conveners Anuj, Arif, and Pranav, of course. My very respected seniors, ladies and gentlemen. It's my pleasure to be one amongst you and share some of the views on Finance Bill 2020. Anuj rightly pointed out that there are about 150 amendments which have been introduced through 84 clauses. Yes. We might have to disable people from cross talking. Yeah. Thank you so much. In fact, there were a few things I wanted to share in the beginning, but the very sheer size of finance bill, would require me to postpone it till end or maybe some other time. But thank you once again. Extremely thankful for, me being invited to share some of the thoughts. In view of the size, we would straight away jump and skip the warming up. We will straight away jump to the important aspects of the finance bill. Permit me to share the screen. Yes, is the PowerPoint visible for everybody?
Yes.
Yes, very nice. Yes, yeah. This is the synopsis of the topics which we are going to discuss. There are about 21 topics. As usual, I have not skipped anything. There is nothing which is kept in option. There are about 21 topics, as I said. Howsoever, in the matters of discussion, yes, the directors and the conveners will regulate the length of the talk. Wherever you feel that it's time up, you may simply tell me 10 minutes in advance, and I'll try to see that we wind up. There are several topics like, subjects like assessments, reassessment, faceless assessments, and the charitable trusts and institutions. If you would see the sheer size of amendments in respect of these subjects, see, it is humanly impossible to cover all of them. However, for the sake of brevity and also for the sake of completeness, I have tried to touch upon most of them, but would present only those which I believe are important. And in the end, if somebody says that, okay, something more is required to be deliberated upon, I shall surely do this. This is the size of synopsis itself, which runs into, as I said, 2 slides. First thing we would take up is the rate of tax. Anuj is right in saying that no news is good news. And there is no change whatsoever in the rates of tax which were prescribed by the Finance Act 2021 for the current fiscal year, that is assessment year 2022-23. It's not very unusual that some changes are made, some tweaking is made here and there, especially in tough times like the years of COVID, wherein the need of the government to revenue is possible, as is possible and permissible. That need has been curtailed, and we should be thankful to the government for that. I singularly believe that, yes, that, that we, as a country, are passing through the times, see, wherein the collection of revenue for meeting the expenditure on management of COVID is colossal. But in spite of that, because of the assumed buoyancy in GST collection and also direct tax collections, no changes whatsoever have been proposed in the rates of tax for AY 22-23. Coming to AY 23-24, the first major change which is sought to be made is by permitting you to file an updated return, you would be required to pay an additional tax, which could be penalty or fees or whatever you take it, is an additional tax of 25% in one case and 50% in another case. So this is one major thing, which is change in the rates of tax. The second is that the alternative minimum tax which is payable by the cooperative society, the others have not been spared, but especially in the context of cooperative society, it is sought to be realigned, on the lines of 115 JB, and that it is reduced from 18.5% to 15%. and the appropriate relief would be there in the quantum of surcharge and the education cess. The heartening factor is that those companies which have been incorporated in the recent times or are likely to be incorporated, if they incorporate themselves up to 31st/3/2024, and if they are found to be engaged in manufacturing activity and added that they are domestic companies, then on compliance of all three cumulative conditions, they would be in a position to pay a minimum tax or a maximum tax of just about 15%. With this, see that, even in countries, see, which call them as tax havens, see, there also I do not find such rates, but for few countries, wherein the rates are 8.5% to 9%. But other than that, India is amongst the rank of those countries which could safely claim that, yes, that it is one of the lowest tax countries. The next is about introduction of a special rate of taxation on income on transfer of something which is now would be called virtual digital asset. So there the tax would be a flat rate of 30% plus surcharge plus education cess, and it would be a colossal tax. The next amendment is a fortunate amendment, is that the special rate of surcharge, which was so far permissible in the context of certain specific long-term capital gains and dividend, is now uniformized in respect of all long-term capital gains on transfer of any other capital asset, which is a welcome move. And if you translate it into maths or arithmetics, the saving could be as high as 5% of the taxes, which is 5% of the income, which is substantial. The next is that, which again is a very welcome move, is that if you happen to be an association of persons, then in such case, so far, and otherwise also, you would be considered as a purpose, as an individual, and for the purposes of levy of surcharge, your surcharge could shoot up as high as 37%. Now, in the context of an AOP wherein members are all companies, and they need not be forming a consortium or otherwise, it could apply even to other domestic AOPs also. Then in domestic is a loose term which I am using. Otherwise, yes, that any AOP which is a resident AOP for the purposes of taxation and which has all the members which are companies, then in such case, the rate of surcharge could be 15% as against 37%, which could have been. So which is again a good move. The last is in respect of cooperative society. Once again, the government appears to be feeling that cooperative societies require a special treatment, a favorable treatment, and therefore, even in respect of the surcharge that is payable by cooperative society, it has been reduced from 12% to 7% if you are in the income window of 1 crore to 10 crores. This is, ladies and gentlemen, as far as the important changes in the rates of taxes are concerned. As Anuj had been saying, that it is in one of the shortest time that one has prepared for this. So if there are lapses, you may please pardon me somewhere in the nooks and corners. However, we have taken care to see that not anything is missed. But if it is so, the mistake would be totally mine. As far as AY 23-24 in the matters of other rates of taxation, there is no change whatsoever in the tax structure, which was the tax structure, or which is the structure for AY 22-23. So in the matters of regular taxation, in the matters of advance tax, in the matters of rates for TDS, and wherever you are eligible for opting for concessional rate of taxation, where you are shifting for optional rate of taxation, all these kinds, say whether you are a resident, non-resident, all of it would continue. The mismatch which has been identified by many, in respect of the tax payable on dividend, the surcharge which is payable on dividend tax there is no more dividend tax, but the tax which you would otherwise pay. And if you happen to be a non-resident, non-corporate assessees, that mismatch would continue, and there is reasonably good case to see that yes, that the surcharge, which is inconsistent in case of this non-resident, non-corporate assessee, is ironed out. Yes, yeah. This is just simply a regulatory, slides which one has put before you. See wherein it has been updated so as to enable you to pick your rate, identify whether the rates which I have placed are right or not, and if they are right, to use them in your regular practice. We would not be discussing with this. We will normally you start with some major tax. In this case, we would start with some withdrawal of some major exemption which was provided. Of course, they had long served the purpose in respect of four subsections of section 10, which have been listed here. Some handsome benefit was being provided to individuals who were under the assignment or deputation from foreign government or foreign institutions, and they were rendering services as technical assistant programmers. In all such cases, the benefit of a tax exemption which was given in respect of their income, and also in special cases in respect of members of their family, that has been now sought to be withdrawn from the current fiscal year. So which is something we would keep in mind. At this point, we will pause and try to take a note of some very important things. If you would see that most of the amendments which are being sought to be inserted this year are especially in three categories as far as its effective date is concerned. One is that, there are good number of amendments which are made retrospective, and those amendments largely have the effect of overruling some of the court cases. This is contrary to the avowed, preaching of the government of India, stating, or the parliament, that, as far as possible, they would not do something which has a retrospective effect, and they would surely not do something which overrules the ruling of a court. Simply saying that, that had not been the intention of the parliament, that would be, I think, see, we should stop this practice of being hypocrites, in the sense that how do you know what was the intention of the parliament? If Supreme Court says that this is what was the intention of the parliament, then let that be so. See, then in that case, simply the finance minister or some bureaucrat, sitting somewhere in the North Block, saying that this was not the intention, it is audacious to claim such things. But be that it may be, we will all try to see that, yes, that we maintain the decorum, not be very critical. By being critical, we lose the sight of our purpose of this talk is, and that is mainly to understand, analyze it, interpret it, dissect it, and then thereafter share our views. That's what it is, without being critical about it. So that is one sort of amendment which is sought to be made as far as effective dates are concerned. The second one is that most of the amendments, most of them, and mind you, this is very important, are made effective from 1/4/2022. And unless those dates are absolute dates, I have taken care to tell you that wherever it is absolute date, which is not in many cases, these amendments are being made effective from assessment for assessment year 22-23 and onwards. Now, this would mean that, at a time when almost 10 months have passed, you are telling me that, that I am in receipt of an income which either is not entitled for claim of deduction or expenditure or an allowance, or in respect of which a loss would not be shifted, would not be allowed to be set off, or importantly, you are telling me that it would be taxed under a different head of income than the head of income which I thought that is the head under which it should be taxable. Now, this is nothing but retrospectivity in my mind. If I am polished, I might call it retroactive, which once again is not something which is palatable. But that is, this is a unique year in which most of the amendments are made effective for AY 22-23, and all of us should be kind. I mean, all of us should be careful in ensuring that, in our last installment of advance tax, yes, we take care of all such incomes, say, which the government intended that they are income for this year, but had failed to inform us in advance. At least, the kindness would have been, from gracious thing from government's part would have been to spare me of the interest under section 234C, which is not the case. The third is the category, the last category, wherein, the amendments are prospective and are made effective from assessment year 23-24. All of these facts have been put in each of the slides. So wherever possible, I would not be referring to them, but where it is necessary, I would do so. The second one is there are, this IFSC, that is International Finance Service Center. Somehow it seems that, yes, that the government of India is sold on this idea. And fortunately, from whatever I gather by way of understanding the developments in this gift city, that government finds that it is very encouraging. Those of the advisors to those government and IFSC centers and others, they also feel that, yes, that the environment is very positive, response is also very good, and therefore now you are almost in the process of setting up an international finance hub with, as if you are in a country within a country, and which has absolutely different, scheme of taxation. So which has the effect of inviting several offshore players to IFSC, for several reasons. The sum and substance of it is there is a non-ending demand, as we have seen in the last 6 years, for seeking exemption in respect of one income after another, for seeking exemption in respect of the newly added financial services, and continuing with this aspect of the government, positive aspect. Yes, there are 4 important amendments which have been made. Those of you who would like to go through, please go through this. Today, time permitting, we will come back to some of the slides which I'm skipping. Other than that, say good luck to you. Yes, the first major amendment is in relation to, that is in respect of our regular practices, in respect of section 14A. Supreme Court time and again has clarified, following the Kami Investments special bench decision, followed by the Delhi High Court's decision, which overturned the special bench decision, to hold that in the year in which you do not claim any exemption in respect of any income which is otherwise includable in total income, and if you have incurred some expenditure for earning such income which is non-existent income because you had no income and you have not claimed exemption, then in such case there will be no disallowance under section 14A of the Income Tax Act. This has been the consistent view, barring that special bench decision, which was a one-off decision which had taken a contrary view. Howsoever, now it is a settled position of this land that is that if I do not have, I am not claiming any exemption, no disallowance could take place. This is something which is not to the liking of the government or the parliament. And therefore, a major amendment is sought to be made in respect of this. Fortunately for AY 22-23, though it is being made in the name of the clarificatory amendment, but I would believe that, that the discretion would be exercised by the authorities in not applying this amendment, to the earlier assessment years, and the courts would surely would not permit such kind of an interpretation. I do not have much doubt about it. However, the fear is not ruled out. Perhaps, say with Ilan, the authorities would try to rely on this amendment to apply it to pending assessments. So, and surely not for rectifying or reopening the cases. The amendment which is sought to be made is, there are 2 amendments. The one is that clearly provided that that if I have incurred an expenditure, no matter that I have no income in respect of which I am claiming exemption, that expenditure would be disallowed on the lines of Rule 8D. And perhaps there is an understanding, that yes, even in such cases, for the purposes of computation of the average investments and such other things, the amendments would not be in a position to influence. So if the person has computed his disallowance as per his understanding of the expenditure which has been incurred for the purposes of non-existing income, and if the assessing officer has not questioned that in all such cases, whatever the courts, including the apex court, has discussed about satisfaction of the AO, in my respectful opinion, would continue to be relevant. The other important amendment which has been made is, to my mind, it even equally that requires to be paid attention to, is that irrespective of whatever is being stated anywhere else, this is a non-obstante clause, notwithstanding anything stated anywhere else, the expenditure, if at all, if it is being claimed in the nooks and corners, that would stand for disallowance, in the sense that it would not be eligible for a deduction or an allowance. So we have taken note of this 14.8, this thing, which will apply to everyone, almost all taxpayers. The other one is a welcome amendment, which is now statutorized. A press release somewhere was introduced, whereunder it was provided that in respect of the assistance or the relief or the subsidy or any grant which was received by an assessee, for meeting the medical expenditure in respect of COVID-19 treatment, such receipt would not be taxable. Legislating the press release intention, now it has been provided with a retrospective effect from AY 2021. And the sum and substance of the amendment is like this, that if there is an employee who is in receipt of any COVID relief from his employer, then in such case that receipt would not be constituted as a perquisite or benefit under section 17. And as long as such receipt is expended, on medical expenditure in his case. Similarly, if he is in receipt of such amount from his employer for treatment of his family members, that too is something which is thrown out of window for purposes of exemption, in the sense that exemption would be provided for such an amount. In addition, it is also provided that if you receive it from someone else other than the employer, then in such case also it would not be constituted as a receipt which is liable to tax as per provisions of 56(2)(10) under the head IFOC. And in such case, the limit of exemption is restricted to 10 lakhs of rupees. Now, so therefore, one would believe that yes, that this is a very welcome thing. Yesterday only I was reading somewhere that wherein the Supreme Court has directed the government that yes, that all your laudable objectives, are found more in talks and less in execution and implementation. So be quick in ensuring that you dispense the reliefs within 10 days or so, a week or so. So that is something, once again, that Supreme Court has come to the rescue of people and has reminded the government to be nimble and quick-footed when it comes to benefit to the people. This is just an amendment which is sought to rectify. There is one singular thing, see, in all these years of practice, which has found for the first time I see that that the government is kind enough, the finance minister has admitted that on 4 counts, see, there had been lapses, there had been mistakes in drafting also, and they all have been sought to be rectified. And 35(1)(a) is one such thing. Please look into it. We don't need to spend too much time on this. Now, another important amendment which is sought to be introduced and which has caught the attention of many people all over, because it has a very wide implications. There are two amendments which have been made in 37(1), one by insertion of explanation 3. There has been already been explanations in existence. The sum and substance of the present law is that if you incur an expenditure, the purpose of which is an offense or is prohibited by law, then in such case, such an expenditure is not allowable as a deduction, period. That is what has been the understanding of this. The courts have understood this very differently, in my very respectful opinion. The purpose of which is an offense or what is prohibited by law is certainly examined by the courts, but howsoever the courts have charted its own law, which is more on the basis of that whether the payment is against the public policy or not, whether it is desirable to claim such an expenditure or not. But all this, once again, is with reference to the person who has incurred the expenditure, not with reference to the purpose of the recipient who has received this money. Second relating thing was that whether this violation which we are talking about, or an offense which we are talking about, the prohibition which we are talking about, is in relation, is to be determined with reference to application of the domestic laws, or it is something which will travel overseas, and that you also need to be an expert to understand that what is the purpose, what is the objective or the interpretation of the overseas law or the laws, and come to a conclusion whether under that particular enactment, a foreign enactment, whether this was an offense or a prohibition. So this is what has been the understanding. As I said, that court had been consistently, delivering these decisions right from Haji Shakur's case and later on in Pyara Singh. Of course, all this was in different context about set off of losses. However, the point was that, courts were clear that, that if you have, been incurring such expenditure, it will be the court which will have the final say in the matters of this allowance. Not many courts have really given, a deep consideration to what is the true interpretation of the language of explanation 1, be that it may be, that is in the wisdom of the court, and I would like to sail with what is the understanding of the court. In this background, the government in 2012 had issued a circular that, that when you incur certain kinds of expenditure, which is received by the purpose, which is received by the recipient and in the hands of the recipient, it is something which is prohibited by the regulations governing their profession or their business or such other things. Such expenditures perhaps would be in the hands of the persons who are incurring such expenditure, would not be allowed as a deduction. And following this circular and the following, few other things, high courts, especially the Punjab and Haryana High Court and the Himachal Pradesh High Court, and very recently the Madras High Court has taken a view that is that such expenditures are not allowable as deduction. I'll elaborate that what is the kind of expenditure we were talking about. I'm just placing before you the judicial development. Mumbai Tribunal, realizing the conflict of views even between the different benches of the tribunal, as recently, to my information, has referred the matter to the special bench and left it to the special bench to decide, especially when high courts have been holding differently. And there is a lone decision of the Delhi High Court, which is in the context of the legality of such expenditure, and whether the companies are prohibited to incur such expenditure or not in the context of Income Tax Act, has taken a view that yes, that there is nothing in the guidelines which have been provided to regulate the medical profession has any application to the companies which have been incurring such expenditure. This is the overall thing of the things which we are going to talk about. The other judicial development which is equally noteworthy is in relation to expenditure which you make outside of this country, wherein you are required to pay some penalty, fine, or even settlement dues, see, for the purposes of some violation of the law or some regulation of the overseas laws. And in such case too also, TOO too also, see, the tribunals have been coming to the rescue of the expenditure has incurred expenditure to, on the pretext that, the violation which we have to keep in mind for disallowance is the violation of the domestic law. And so therefore, if you murder a person within the country, you would be hanged. But if you do so outside the country, then in that case, that perhaps could be a possibility of, running away with some relief. That's, I'm just loosely explaining you, see, I am absolutely neutral as far as this amendment is concerned. But our job today would be to understand that, that neutrality should remain absolutely neutral and neutral, or, that we still have some window open, to claim any expenditure other than that. The purpose of today's discussion would be restricted to that. Coming back to this is now the raging controversy is in relation to the expenditure incurred by the corporates and many other assessees, because it applies to all taxpayers, is that expenditure incurred on providing hospitality in the forms of gifts, in the forms of tours, in the forms of, see, events, occasions, and such other things, and the freebies also. So all these, the person who have incurred expenditure, could the allowance or disallowance, or could the objective, could be decided with reference to the, of the same in the hands of the recipient. So if a recipient is prohibited under some regulation governing the conduct of the recipient in his profession, her profession, or in her business, then in such case, could this, deregularization or the unacceptability of that as per the regulations governing the recipient, could that be imported in order to decide that whether the purpose of the payer was an offense or prohibition? As we have noted that even within this small window, there is a conflict of judicial views. The high courts are against allowance of such expenditure. Tribunals are consistently, but for the first decision, in the case of Liva Healthcare, that all of them have been taking a consistent view, more relying on the Delhi High Court's decision, which said that for a payer, it is not something which is an offense. So considering this, now it is being provided that even in cases, if there are regulations in place, law in place governing the conduct of a recipient, then in that case, those regulations or law would be utilized and would be present in service to decide that whether the payment was an offense or whether there was a prohibition or not. This is in a nutshell, this is the first major amendment. The second amendment is also that now, whatever is being paid for violation of a domestic law, overseas law, foreign law, then in that case, such payment, when it is sought to be claimed as a deduction in computing total income, which is subjected to Indian income tax, then in such case, that too would not be allowed as a deduction. And the third amendment is that if you pay if you make any payment for compounding such offense, I thought that it was something which was always there. If you make some payment for compounding an offense, which otherwise is a prohibition, the idea was in some quarters that if you make some payment for compounding an offense, that the payment of it is not an offense. Possibly that could have been a possible interpretation of the language of the law, that even such payment would be allowed as a deduction, and now it has been provided that such payments also would not be allowed as a deduction. So these are, ladies and gentlemen, these are the three important amendments which are being sought to be carried out. Having said that, see right now, let's just very quickly understand that with this, see the expenditure which is against the public policy is unaffected by these amendments. Those expenditure would continue to be disallowed of the court, and whether they are disallowable as per express provisions of explanation 3 or 1, that is independent disallowance, would be independent of it, and you will have to take your own call. After having taken a call that such an expenditure is otherwise not against the public policy, your step 2 would be to see that whether the existing explanation and the one which is sought to be introduced is applicable to your case or not. So if on a satisfaction of these twin conditions, you would be in a position to hold that yes, that whether the expenditure would be allowed as a deduction or not. Two things which you will have to keep in mind is, while applying the language of explanations, you will have to keep in mind that in order to decide that whether it is prohibited, whether there is a violation, whether there is an offense or not, you need to examine not only the position qua the payer, that condition would continue to be relevant. In my opinion, it is already there. But you now also need to determine that whether qua the recipient, whether such an expenditure is relevant or not. While on this amendment, we would also take note of an important amendment which is sought to be made in the form of 28(4), which is an existence section, which provides that if a person is the position benefit or a public visit, would be required to deduct tax at source. And we will discuss about the rate of tax or the threshold of exemption for this. The important thing which we will have to take home here itself is that now your form 26AS would reveal that whether you are a recipient of any such perquisite or benefit. If as a chartered accountant, my client's company has taken me on an overseas tour just to see that, I am kept happy and I continue to serve him well, then in such cases, if that is a benefit which I am in the habit of not recognizing year after year, then in such case, now that would arise a need to recognize such benefit, offer it as a tax, or if you are advised not to offer it as a tax, would be your discretion, but there would be a TDS sitting in your form 26AS, alarming the authority that there is a need to see that, whether such an income or a receipt of benefit is taxable or not. So this is the first amendment, see, which one will have to be take into account. It is seeking to rewrite the law. Though one would say that, that one would not be very critical, because there had been 3 decisions of the High Court holding that, that such an allowance perhaps is not something which is well within the books of law. The next amendment which is sought to be made, and this is sought to be made retrospective from 1/4/2005 and should apply to AY 2005-6, whether in cases where the disallowance is still under litigation, whether that will be, this amendment would be pressed in service or not. The answer apparently is why not, because there is an express admission on the part of the legislature to make this retrospective. So those cases which are pending litigation, then in that case, the courts in deciding the issue would be taking recourse to the retrospective amendment. That's one. The second is that, in cases whether such an allowance when made, and if it applies to assessment year which could be reopened under the new prescription of reopening and reassessment chapter, then in such case, whether it could be reopened or not, two views are possible. Both are genuine views, that in such case, some courts have been holding that yes, that whatever was the law at the time when the assessment was made, and if it was rightly applied, then in such case, the new retrospectivity should not give a tool in the hands of the authorities to reopen the cases. That is, but these are very few cases which have been holding. So as against that, the good number of cases have been holding that yes, that reopening retrospectivity will enable the assessing officer to reopen the case. So in all such cases, I would advise all of our friends to take his own call, take a very judicious understanding on the reopening and then contest it. But as if I were you, then I would surely, while objecting to the notice under section 148, I would place my objection on record, and as the time would unfold, would take an appropriate decision. For coming to the case of an objection, it should be a regulatory objection which one should take in the matters of reopening. And in the matters of pending litigation, of course, the judges would decide that what is the appropriate effect of this retrospectivity. Having said that, the amendment, or what is the present law, is that in respect of a cess or a surcharge, education cess or a surcharge, which is paid in respect of income tax, mind you, what we are discussing presently is all about income tax and nothing about GST, sales tax or VAT or municipal tax laws and other things. It's that when you pay a cess on an income tax, could it be said as a tax within the meaning of section 2, subsection 45? And if it is not a tax, or if it is a tax, then in such case, whether such a payment is disallowable under the express provision of 40A small 2, under the express provision of 40A small 2. And the related controversy, which is very important to my mind and which is not being touched upon largely over the last decade in deciding many of these cases, is that in deciding many of these cases is that whether, even though it is a tax or a not tax, whether it is an expenditure which could be considered as an expenditure wholly and exclusively incurred for the purposes of business. Now, these are the twin conditions to my mind should be examined. Most of these decisions, with respect, including Bombay High Court decision and the Rajasthan High Court decisions, have not looked into, with absolute respect, I'm saying, have not looked into the need to see that whether this expenditure is payment otherwise is a business expenditure, could be classified as a business expenditure and therefore made qualified for the purposes of deduction. Be that it may be. Coming back to this, is the controversy is a very short thing. Rajasthan High Court was the first to take a stand that cess is not a tax and therefore it is not hit by 48(2). Bombay High Court in Sesa Goa has followed suit to hold that yes, that cess is not a tax and therefore it is not allowable, not disallowable. 2 subsection 45 was examined partially by Bombay High Court in this case, and then they had come to a conclusion that this is not a disallowable expenditure. In the matters of surcharge, discussion available. However, the view was that for surcharge, your case was on a very weak footing. It did not have many legs to stand on, but in the matters of cess, there was a good case for disallowance. The tribunal, as usual, have been following suit, and therefore the expenditure for cess was allowed as a deduction. Most of the companies, had either claimed it when they were alert to the developments in law, And the many companies had followed suit, by revising the return. Some had claimed it during the course of assessment, and some have been advised to claim it during the course of pending appellate proceedings. So this is the short and sweet of it. All these trouble which the companies, the taxpayers have taken now is sought to be brought to naught with retrospective effect by saying that yes, that cess would be otherwise considered to be an expenditure which is not allowable. The amendment is sought to be made in 48(2). Unfortunately, it is not made in section 2, subsection 45, and perhaps rightly so, that that to expanding the scope of tax could have some other consequences somewhere else. So for the purposes of 48(2), now this is an express disallowance irrespective of 37. There is no need for the department to prove that it is not wholly and exclusively incurred for the purposes of deduction, for the purposes of business. So this is the sum and substance of this. There is a circular of 67 which was being interpreted by the court. Unfortunate thing is that the government, while explaining the amendment in EM, that is explanatory memorandum, has stated that for doing so, we are relying on the latest decision of Kolkata Tribunal. Now, if you are so discreet, then there are thousands of decisions wherein tribunals have taken a view in different contexts, in different provisions, that the treatment meted out by the taxpayer is the correct treatment. Then why do you not also amend the laws in such circumstances also? Simply, picking up a loan decision of a Kolkata tribunal, see that also delivered in the heat of the moment, over not following many of the cases, instead of referring to special bench. This is a judicial discipline which the tribunal should have pursued. Instead of that, going out and giving a decision that yes, that we will not follow the other decisions. And they have audaciously sought to rely on Supreme Court by stating that the earlier benches had not taken the note of this decision, and therefore holding loosely that those decisions were per incuriam is, to my mind, is absolutely mockery of justice by the tribunal benches, something which should have been avoided. Howsoever, I am absolutely discreet. My understanding of the law is very limited, and therefore, my words should not carry so much of this thing strength when I talk about the wisdom of the tribunal or the courts. Howsoever, there are few things you would like to, because having practiced these laws before this fora for so many years, one believe that one at least is qualified to at least whisper about it. The next major amendment which is being sought to be made in relation to 43B, that is capital B, the short and sweet of this amendment is that the government has noticed these lapse, noticed their lapse or their deficiency in the law on 3 different occasions. The story is all about an interest which has remained to be paid on the borrowings of loans and advances obtained from the NBFC or financial institutions or the banks or such other players. Then in that case, even where you have not paid such interest, could you claim such interest which is outstanding as a deduction in the year in which you have admitted in association in tandem with the lenders to convert this outstanding interest into some kind of a borrowing or a loan or an advance. And the courts had been kind to the taxpayers by allowing such deduction in the year of conversion. And the government, as usual, not liking such practice, had introduced explanations 3C, 3CA, and 3D to curb such practice, to say that such conversions would not be considered as actual payment of the outstanding interest. Good. Now, as it would be that, that the practice of tax is a dynamic practice. It keeps on evolving. And to be true to their practices, and the taxpayers in their incessant desire to save on taxes would new situations, new planning. And one such planning was that instead of converting into loan, advance, or borrowing, if such outstanding interest which is not paid, if it is converted by issue of debenture, and then in such case, when you issue the debenture, then in the year of issue of debenture, could such conversion be construed to be a case of actual payment for the purposes of section 43B? If that is so, that is what is, then in such case, it would qualify for deduction. And this is exactly what Supreme Court held in Aqua Technologies Limited's case, which is not a very old decision, a recent decision, wherein Supreme Court said that when you convert it to debentures, explanations 3A, 3C, 3CA, and 3D will have no role to play. Government does not like this, the parliament does not like it, and therefore an amendment is sought to be made, fortunately effective from current fiscal year. The difficulties that would arise in respect of pending litigation, we have already identified, would continue to be there. How independent of that, that would surely apply to assessment year 22-23. And if your client is a person which has converted such loan, such outstanding into debentures, then this you would be the first one to be hit by the amendment. Thus, in summary, now it has been provided that if you convert this into a debenture, this meaning the outstanding interest, you would be hit by 43B and expenditure would not be held up. The question that would be following this one would be, what happens when you redeem the debentures? What happens when you redeem the debentures? The apparent answer should be is that, you know, in the year of redemption, it would be construed to be an actual payment, and 43B would not come again, would not be used against you, but would come to your rescue to claim the allowance. Interesting question was asked in one before yesterday was that what if I redeem the debenture after having used, you know, in the same assessment year before the end of fiscal year? The answer, Pat, is yes, you will get a deduction. But if you are in a position, if you are flushed with liquidity, then in that case, instead of undergoing the rigmarole of converting first into debenture, it perhaps is right to straight away pay the outstanding interest and bury the hatchet for all the times to come. Maybe the wisdom behind suggesting such thing was that it would be with this, it would be possible for you to claim expenditure in different years wherein you pay the redemption by phasing out the prepayment. Perhaps that is a possibility which was sought to be made. Slum sale is just a consequential amendment. The government has admitted that previous year when they amended, this sales to transfer, then in such case, in the same section 2, subsection 42C, the word sale was used at 2 places. They had amended it at 1 place and failed to amend it at another place. The government has recognized the mistake and now has sought to amend it at the other place also. The other one is Goodwill. This is an interesting thing. Yes, again, this is an amendment of 2021 and not actually of 2020. Government did not like the claim of depreciation in respect of goodwill in specified cases, especially in major cases like amalgamation goodwill and such other things, wherein no actual payment was being made, for the purposes of acquiring goodwill. Now the government previous year provided that such goodwill would not be entitled to depreciation. Government advised you to apply 43(6)(c) small 2 capital B to provide that WDV should be appropriately tweaked, in the sense pulled down, and therefore the depreciation the reduced rate. At that time, nothing was whispered in the context of Section 50, and rightly so. It is being sought to be said that, there would be, for the purposes of Section 50, this writing down in the block of asset would be construed to be a transfer. So in the event if you are advised to write it down, then in that case it would be construed to a transfer. Perhaps the parliament thought that that it will have no tax effect, no taxable event would arise on such writing down in the context of Section 50. My humble suggestion is please reread Section 50, that in cases wherein goodwill is the loan asset which is sitting in a block of asset, and if you consider it as a case of transfer, there could arise some cases wherein if the block turns into negative case, then or it becomes nil. In such case, there could be some difficulties under Section 45, read with Section 50. I would not like to conclude it here, but I would take a view that even if that be so, such a transfer, unless the goodwill is actually transferred, such a transfer, the deemed transfer, unless the goodwill is actually transferred, should not help you to activate the provisions of Section 45 with Section 50. This is a doubt, which is raised already by the professionals. And my take on this would be that, nonetheless, there need to be a real transfer until such time 45 should not be activated. But as I pointed out, the other view is not impossible. The other view is not impossible. The next amendment is cash credit. If you would see, yes, that if one understands the existing practice and the enormous litigation which has flooded the courts and tribunals surrounding the application of Section 68 in particular, you are left with nothing but sympathy for these courts, for deciding these issues. The courts, including Supreme Court, have been taking views based on of the case. If there are bad facts, you will get bad decisions, and if there are good facts, even though otherwise, apparently it is clear that this is nothing but an accommodation, in such case also you will run away with good decisions. So this is a serious judicial dilemma faced by the courts, and the judges have decided things either one way or the other. And there is, in whatever little wisdom I have, is that there is no certainty even today while we are discussing these matters, to decide very cleanly that whether a particular case is a case where Section 68 would apply or not. Supreme Court blows hot and cold, and there is therefore no wonder that high courts also do so, and tribunal, the same bench in the morning decides a case in favor of the assessee, and in the afternoon before it sits up, that it decides the case against the assessee. So therefore, those of us, all of you, who are in the practice of interpreting 68, especially in such cases, they have a very tough time. And as if this difficulty is not absolutely pronounced, now the amendment which is sought to be introduced is going to increase the difficulty, because the difficulty is that this amendment also in no way, mind you, amendment also in no view, in my limited understanding, is going to bring any curtains on the raging controversy. The practitioners of accommodation entry, have perfected this art into a science. Perfected this art into a science, and it is commerce for these practitioners. And therefore, they will not, give up so easily. What's happening is, and many a times, I would not say that, yes, that what taxpayers are doing, what we are doing is correct or not. Let us keep the morals or the ethical aspects of this aside. The point is that all of us are aware that, what really is underneath these accommodation entries. So in some cases, see, like what happened in the case of Pawan Kumar Singhvi, see, before Ahmedabad tribunal, wherein the lone member of the tribunal, single member of the tribunal decided that irrespective of whatever you preach before me, I understand that this is a case of an accommodation entry, and therefore, I am going to confirm the action of the assessing officer. That was a single member. Everybody smiled at the audacity of the single member because he was ignoring thousands of decisions of the coordinate benches of the tribunal, thousands of decisions. This decision traveled to Gujarat High Court. The division bench of the Gujarat High Court blessed this decision, and then it became the law as far as the jurisdiction of Gujarat was concerned. An SLP was filed by the assessee to the Supreme Court. It was rejected by the Supreme Court. Therefore, the decision of a single member now is laughing, see, in our face. So this is one development which you may take into consideration. I am purposely bringing to your attention this sole happening and ignoring those 1,000 decisions for the reason that, see, as advisors, it is our bounden duty to see to that yes, that the clients who seek our advice, not those who ignore our advice, then in that case, it will be our duty to put them to notice and tell them very clearly that this is something there could be a lurking danger, and also provide the copies of these decisions in their hands, and let thereafter their promoters, CEOs, CFOs take a decision in that context. As if the damage was not enough, damage done by the SLP rejection was not enough. This single member who is now a vice president of a bench, in one of the cases very recently decided, that is Lena Power's decision, has followed his own decision in Pawan Kumar Singhvi's case, has followed the Gujarat High Court decision, and has relied on rejection of SLP by the Supreme Court. So therefore, just this week, in one of the cases when we were arguing before him for seeking a clarity on reopening of the case, and mind you that the bench was with us. The vice president was heading the bench was with us on reopening. But he said that, that why don't we look into the reason? And the moment he looked into the reason unabashedly was saying that there was a case of an accommodation entry. And without really looking into the fact that, this was an irrelevant fact as far as the irregularity of reopening was concerned, which was surely a bad in law decision. See, that member had no hesitation in holding that, let this case be adjourned at my request, realizing the futility of continuing before the bench of this case. See, I requested for adjournment, and the member had the audacity to tell the DR that there is already a decision, his own decision, which he should look into while defending the case on 8th of March. This is the way the things are going about, that there are some members who are very disturbed, and I don't see any reason that their disturbance is baseless. There is a concern. So there is a need for the practitioners, the pleaders to refresh their entire understanding and not advise clients simply on the basis of the formula of compliance of the three requirements, that is identity, genuineness, and the creditworthiness. You will have to travel beyond that in order to see that what is the preponderance of probability. What is the preponderance of probability? You have an existing minister who had faced, serious issues. And because perhaps, I would not like to believe so, but because he was a minister or he is a minister, these issues have died down, but they continue to bother other taxpayers. So coming back to this, I am extremely sorry for having taken few more minutes on this subject. But if I had not explained to you the seriousness of these issues, which is bothering the courts, involving billions of rupees, this issue would not be practiced and understood properly. Be on alert the moment you are asked to defend such case. Go beyond that. I have no hesitation in my mind. A favorable decision which has been obtained from the CIT appeal would not be overturned simply because Pawan Kumar Singhvi or Leena Power has stated something. But the tribunal in its wisdom would be kind to give you an additional opportunity by setting aside the case back to the file of the CIT appeal. I would request you to seek a restoration back to the file of assessing officer and try to do more homework. Try to do more homework by proving something more than the 3 legs, and also find the 4th leg of an animal, whereunder you would be in a position to do justice to such an appeal. But that once again is, say I'm not in the business of advising this august crowd. You will have to take your own call. But this is something my office has found in the short period of 1 month, is something which we are continuously trying to preach and follow also, practice also. The amendment which is now sought to be made is, way back Madras High Court rightly and very famously stated in 49 ITR reported cases, Astimal's case, that an assessee is required to prove the source of income. There is source of loan. There is no doubt about it. So I have to say that I have received a loan from Karodimal. That is the way I was required to prove. But what was the source of Karodimal in the hands of Astimal was not required to be proved. And the courts were consistent in holding, reiterating that yes, that the source of source was not to be proved. Because of the bad losses government made before the Supreme Court in the case of Lovely Exports and Stellar and Sophia, the law was sought to be rewritten with effect from 1/4/2013, limited to the cases of receipt of share capital, share premium, and such other things, share application, and such related receipts from perhaps the shareholders. Then in such case, there was a duty to establish the source of source. Duty to establish the source of source, and the law is so construed, so made effective, that it was the duty of the person who had lent the money, the person who had given the share application money, to explain that he had a source which also met the test, the 3 tests of the requirement of section 68. This is something which I understand, that even the lender is required to also establish and comply with 3 tests. It could be 2, it could be 1, it could be very different, because so far this aspect has not been examined even by the Bombay High Court, who had an occasion to examine the prospectivity or prospectivity of these cases. So be that it may be, that 2013 amendment was falling short of covering all taxpayers in respect of all credits. So now it is an all-pervasive to be introduced, requiring not only the source, his source, but the source of source. How would you discharge this responsibility is something, to my mind, is going to be a billion-dollar question. That is something which is not provided for. The guidance is not provided. If the government is right and is serious about this amendment, I would hold that the government should be proactive and not wait for the Supreme Court in next 25 years to decide that how this burden could be discharged. It would be foolishness, flooding the courts with litigation after litigation. Right thing is, whether they are right or otherwise, they should provide the procedure by clearly stating that this is how the source of source could be explained to the satisfaction of assessing officer. If you are scared about, say its binding nature, then in that case, I would believe that even though it may be appropriate that there could be a fear in some corners in the minds of the government. Still, in such cases, it would be good to provide so that 98% of the cases, the authorities will not trouble you once you have laid certain evidences which are provided by the government in the law itself. So coming back to this is that there are few regulated entities like venture capital company, venture capital fund, and VCS. Those are the ones to whom this amendment would not apply. Having said that, yes, that the government finds that these VCs and other people are blue boys. Even these vehicles I have seen, they have been abused, see, for the purposes of Section 68, what be that it may be. Presently, these are the regulated entities which are, the blue boys of the government, and therefore there is no difficulty as far as Section 68 is concerned in this. In the end, keep that in mind. Source of source will have to be explained. Fortunately, it is made effective from the next assessment year 23-24. So if there are difficulties in the course for this present fiscal, what is required to be explained is source only, and therefore you don't need to have a very cleanest of broom to make your client understand the implication of the amendment. The next is a major amendment. Once again, I do not know that, that whether we are keeping pace with time, but today I have promised myself that, that the D time is 12:30 and I intend to close it by 12:30. So as and when it is about 11 o'clock, Rajendra may tell us that we might have a break, see, for about 2 minutes just to, see, have some liquid, and thereafter, we would once again. So that would also give me a time to refresh everything so that, we remodel the discussion for the present slides. Coming to this is because, and this year I tell you that not only the volume of amendments is many, but the quality of amendments also is something which is alarming. These are not the amendments which even a regular practitioner can ignore. They would arise, they would apply to you in your regular day-to-day practice. And I am no different than all of you. So therefore, see, the moment I am talking, see, the moment I started looking into it, I could find number of cases in my small office, which has the implication by these amendments. So therefore, please look into this. Yes, this is, I'm talking about Section 79A. And while doing so, we also will have to take into consideration 115 BBD, which is a provision which has been there since 2011-12, which has been largely amended and has been revamped in the wake of demonetization from December 2016. And the amendment is that if you are in receipt of any income which cannot be explained by you, such an income would be classified as an undisclosed income or an unexplained income. The correct terminology is unexplained income. If you are in receipt of an income which is unexplained, and it fits into the scheme of Section 68 to 69D, then in such case, you will end up paying tax at a special rate of 60% plus surcharge at the rate of 20%, makes it 70% plus education cess on it at 4%, makes it 77% something, plus penalty if the officer is unkind to you at the rate of 10% of 75% or 77%. There is some debate over here. Then in that case, you might end up paying 83%. And you were to be searched, and you are also made liable to pay penalties then. And if you have not been alert enough to declare such an income, then you might end up paying taxes at the rate of 136% or thereabout. So it's just not only criminal, but it is sinful to ask a taxpayer to pay such an amount. But that be that it may be, that is the case in this. Now, following that 115 BBD, the issue was that in cases where, and mind you, read this very carefully, listen to this carefully. In cases where a person had made a declaration of such undisclosed income in the course of survey or search and seizure, in the course of survey 2, then in such case, the interesting issue was that if I had some other losses, or I had losses pertaining to the similar undeclared business, whether such losses or including the brought forward unabsorbed losses, whether it could be set off or not in computing the business income. In computing the business income. You had a Gujarat High Court decision, see, not a wrong decision, delivered long back, some 30, 40 years back, holding that, that in such case, the head of the income under which the tax would be paid would be income from other sources and not business income. This decision of the Gujarat High Court, which has the serious implications and which is not expressly overruled till date, is differently interpreted by the very same Gujarat High Court in yet another decision, which is placed in this slide. That in that decision, the court said that yes, that it should be when there are enough evidences to hold this, or where there are enough non-evidences to hold otherwise. Enough non-evidences to hold otherwise, the income would be taxed under the head business income. And if that be the case, then in that case, following the Delhi tribunal and especially Jaipur tribunal, which examine the issue in the context of section 70, 71, 72, and 115 BBD and 68 to 69 D, to hold that such losses would be allowed to be adjusted. Wonderful. These decisions cannot be ignored because they are decisions which have examined the issues, and mind you, they are not convenient decisions. They are to be respected. But overruling this good work, now it is being so provided by insertion of 79A, not amending any other provisions, not amending even 115 BBD, which they could have. It has been done very wisely by insertion of 79A to provide that special rate or otherwise. Such losses, whether remaining unabsorbed, whether for the year relating to some other activity or relating to the same activity, even where declared or otherwise, but which is included in the assessed total income by the AO, even where included in the return of income which is filed under 115 BBD by the assessee voluntarily. In all such cases, in my limited respectful opinion, 79A would apply. 79A would apply, and all that good work which has been done by the courts have been done away with, is sought to be overruled, and the Gujarat High Court's earlier decision, Muhammad something, Fakir or something, or Fakir Muhammad's decision, is something which perhaps would have the last laugh. So this is a decision which is not going to regularize. So when you are advised by the investigation authorities to misguide you, to mislead you during the course, in the heat of the search and seizure or the survey, and if you are not provided with the assistance of a tax consultant during the course of such investigation action, please think about it 10 times before you rush and declare something. You would not be allowed, or it would be, I would also advise you to, before advising anyone, to see that yes, that the losses which are not there are activated. People do all kinds of things. See, I respect all of them. I have no disrespect. But it is also the case that, the hard reality is that after having declared income, people see that, they hunt for losses. They hunt for the losses in the hope that such losses will be allowed to be set off. Till date, see the Jaipur tribunal laid down the correct law, which perhaps is now not the correct law. And fortunately, this amendment is applicable for current year and the subsequent years. The other one is a PSU amendment. I understand it is very vaguely worded, say, and I'll not like to comment on it, but it so is providing that yes, so is inserted to enable companies like, Air India and others, which have been taken over by Tata companies, Tassel and other things, see whether those companies will be able to carry forward the erstwhile losses of the losses of the erstwhile PSU. The way I would like to read the amendment is that a PSU continues, the promoters are changed. Because of the change of promoters, the company is no more a PSU, but the company continues with the losses and the losses are sought to be set off. If that is the correct interpretation, then Section 79 amendment will come to rescue, and therefore it would not be PSU losses. So, and even if those are CHC losses, it would, in such cases, this amendment could help. However, if the business is taken over, in such cases, if the idea is to also transport the losses which are unabsorbed of the erstwhile PSU, then in that case, I would believe an extra mile will have to be walked by the parliament before such losses are made possible. But I am not the right person to comment on these colossal transfers of magnitude of losses, which I am told is more than 15,000 crores. We come to Chapter 6A deductions. The first amendment is sought to be made only, which has a limited application for state government employees. Somehow I feel that, that government employees are not taxpayers, see, who really require our assistance as tax consultant. They are the law unto themselves, all employees, barring a few, see, right? So they are capable of taking and not spend too much time understanding the amendments which have been sought to be introduced partially to promote only government employees. See, what happens is that I have a golden rule, that when I'm practicing, as a tax practitioner or as a family member, I should be the last beneficiary when I am the one who is allowed to take decision. I would keep myself the last, and I have no reason to believe that you also don't do this. All of us are trained to keep ourselves last and, see to that while we take the decision for someone's benefit, we keep ourselves last in the train or in the queue. But here is a class, see, which always keeps themselves first. They believe that, that they should be the first beneficiaries, in spite of the fact that, they roll in and out years after years in the best of the benefits and perquisites. And all these benefits and perquisites are being financed by the taxpayers, including those who are non-income taxpayers. They finance their taxes, by purchasing, by expanding, and so many other things. So this is one such amendment which is now provided, that state government employees are now brought to par with central government employees. And if the employers contribute up to 14% in NPS, then in such case, in cases where such contribution is considered first as an income of the state government employee, they will get a simultaneous deduction up to 14% of contribution. The balance, I am sure, that should be treated as an income. In how many state government employees cases, show me that, such income is treated as an income, even by employer, for the purposes of deducting tax at source. Be that it may be, as far as the law is concerned, this is an amendment which has been correctly made, and I have dutifully placed it before you. The second is a beneficial amendment and a good amendment which is sought to be provided. Presently, a handsome deduction is provided on payment for an insurance policy of a premium, which deduction can go up to 75,000 and which in some case can go up to 1,25,000. And this deduction is allowed in the case of a person who has a dependent disabled relative, and the payment is made by a sponsor who has such a relative. The difficulty which was being faced in this case is what? That the policy was required to include a clause. The policy, this is not the requirement for tax deduction, but if you wanted to claim a deduction, it was a requirement that the policy was to include a clause that the annuities would not be paid. The payment of annuities would begin post death of the sponsors. Nothing incorrect about it. It was made clear from day one itself that the policy was to benefit the disabled relative only in the event when the person who is a sponsor dies. And thereafter the benefit continues, because that was the time, in the absence of the sponsor, the person was required to have some receipt which will take care of his expenditure. This was coming in the way in genuine cases wherein the sponsor himself was in the need of money to see that, the dependent relatives' treatment is taken care of. To do that, a noble amendment is sought to be introduced to provide that the policy terms could be changed to provide that, even during the lifetime of the sponsor, if the annuity begins, then on satisfaction of twin conditions, which are that by the time when the payment begins of annuity, the payment of the policy premium has discontinued. And the second is that by the time when he receives, the sponsor should have completed 60 years of his life. If these twin conditions are satisfied, then in that case, if you have such a clause, it will not be a disabling clause for claiming deduction today, not in respect of receipt, but in respect of the premium. Not in respect of receipt, but in respect of the premium. This is First Amendment. Keep track of this. Is a little confusingly worded amendment, and different people have understood it differently. So therefore, I thought that, at least let me share with you my understanding of the things, which could still be different than your understanding. But this is the way I would like to read the law, that the payment of premium is essential. There should be, even if there is a clause which provides for the payment of annuity during the lifetime, it will not be disabling provision as long as the policy provides for such payment of annuity beyond 60 years of my life. That is the first thing. The second salient amendment which is sought to be provided is the one which says that even if the annuity is being received and used by the disabled person during the lifetime of the sponsor, it would not be taxed in the hands of the recipient of an annuity, which is the disabled dependent relative of the person. So these are two twin amendments which have come. Fortunately, the government is so proactive, and I really am happy about it, is that Justice Sikri, while he was there before his retirement in one of the cases governing the payment to be made under such policies, a non-tax cases, in Ravi Agarwal's case, in a writ petition, had decided, had observed that there could be some serious issues similar to these amendment cases, that some care has to be taken by the government in the matters of tax laws. And the government has proactively worked on it and suggested this amendment. God bless the government on this aspect at least.
Pradip bhai, shall we take break?
Yeah. Let me complete this chapter 6A.
Okay, sir. Okay.
It will take 2-3 more minutes.
Okay.
The startup extension is a regulatory thing, which happens year after year. It has once again been extended up to 31/3/2023. Thus, in nutshell, what is meant is that if you were to incorporate a startup company by 31/3/2023, and if you also comply with host of other conditions, including the one that is permission or a license from the relevant concerned ministry, then in that case, you will get a handsome 100% deduction for the purposes of taxation for a period of 3 years out of any 10 years of your choice from the date of incorporation. A very handsome amendment. There is 56/210 also is very kind to these startup companies. So enjoy the ride while you can. The next is bonus tripping. Yes. Jiten bhai, we can take a break. And what would be the duration of the break, please?
You tell me 3 minutes?
I'm
5
good.
minutes?
We would join in 3 minutes because there are lots of things. Okay. Thank you.
Yes, yes. So it is 11:10 now. Participants will join again by 11:13. Pradip, let us know once we are ready to go.
Yeah, I'm ready. Once you ask me, I'll kickstart.
Yes, sir. I think we can start.
We can start. All right. Yeah. Yeah. Welcome back, all of you. See uh, 1 second. The startup I have done. Yes. Yes. The next amendment, which again is a major amendment, which all of us should take note of. Your attention is invited to two important provisions. One is 94.7 and the other one is 94.8. 94.7 deals with dividend stripping and 94.8 deals with bonus stripping. These are two different provisions. 94.7 has the function of providing that, if you were to receive some dividend, and which you had purchased in a time which is within the certain window of the record date, and in such cases, if such dividend was to be exempt, and the security or the unit which you had purchased, had finally resulted into some losses, then in that case, those losses would be ignored for the purposes of 94.7. As against that, 94.8 provides that, in case if some bonus is announced within a prescribed period of your purchase and post-record date, and if such transfer of the original units which you had purchased has resulted in losses, then such losses will be ignored and the amount of losses would be added to the cost of acquisition of the scripts which are continuing to be held by you. This is the short and sweet of it. Two important amendments are sought to be made. One is that, there had been an understanding in some corners of the profession whereunder it was believed that 94.8 permitted the losses on account of bonus stripping in respect of all securities other than units. In respect of all securities other than units, especially shares. And such an understanding of the profession was tested by few of the decisions of the tribunal in favor of the assessee to hold that 94.8 was covering the case of bonus stripping in respect of bonus of units only, in as much as 94.8 did not cover the cases of securities other than units. So when one used to read the section as was available, perhaps these tribunals are right in holding this. The tribunals were also asked, and the other part of the professionals was that if you were to look into the memorandum explaining the then provisions when 94.8 was amended, it was so clear that other security bonus stripping also was covered. Howsoever, because of the inadequacy of the language of 94.8, there was a need to now include two things. One is securities. So now it has been provided that, that not only units, but security losses also. Fortunately, this amendment is prospective. So if you have now bonus stripping in relation to shares 2, TOO, then in that case, it would be not possible to claim such losses. They would be ignored and it would be added to the cost of acquisition. In the year of eventual transfer of the bonus securities, you would be entitled to adjust these losses because there are otherwise no actual losses. They are book losses. Okay. Further to that is the other amendment which is sought to be made in 94.8 also is that the pooled investment vehicles like REITs, InvITs, and the AIFs also are now covered. And if there is a possibility, howsoever remote it could be, that if there are bonus stripping cases, then such losses will also be ignored. This is as far as 94.8 is concerned. Now an amendment is also sought to be made in 94(7) to provide that pooled investment vehicles, that is PIVs, in the form of InvIT, REITs and AIFs, they would also be subjected to the cases of dividend stripping. I have nothing against this. The issue here is that were these PIVs not always securities? Because 94(7) always covered the cases of securities and units. And if you look into section 2, subsection H of the SCARA, that is SCRA, Security Control Regulation Act, it very clearly includes these PIVs as part of the securities. This is simply a case of an over legislation. So as far as 94(7) is concerned, now it is abundantly clear that these PIV vehicles also are, instruments also are covered. When it comes to 94(8), I'll just share with you some anxiety which I had undergone through, and I think it is fit to share this. I was examining that, that was this, pooled investment vehicles instruments were not units earlier. And to my surprise, I could find that, that they could not be considered as units for the purposes of income tax at least, because for the purposes of 94(8), what is an unit? A reference has to be made to 115B or some such other provisions. And from there, they take us to 1023D. And if what is transpiring is that a unit is a unit is a unit, provided it is an unit of a mutual fund. And these PIVs are not considered as mutual funds. And therefore, there was a need of amending 94(8) for the purposes of PIVs. For the losses, we have already understood. So this is the sum and substance of major two amendments. And the decisions are Bangalore Tribunal and Pune Tribunal. One is reported, the other one is not reported, but it is available on Indian Kanun. Indian Kanun is one such website, though maintained in a very clumsy manner, but it is a lender of last resort. Whatever decision, whether it is in the matter of tax laws, indirect tax laws, or any other provisions, by and large, it has helped us in locating the decision, which then have to be converted into a readable format and which could be easily saved or printed. But it otherwise is a site which is not a charged site, but it is always helping. So whenever you have some decision which you believe is an unreported decision in any other law, and Indian Kanun would be too pleased to receive such decision, because it's not always that, that they are able to retrieve all such decisions. So as a custodian, if they could be helped in their practice, it would be a good help for them. Then this is one fashionable amendment which has come, which is being talked about. I honestly don't know that to how many people it has application, but I sincerely believe that such are the amendments. The government is very proactive to such issues, and in very few years of its practice, government has come out with amendments, and these are the amendments which really, titillate us as practitioners to understand that what is the way the laws would develop, tax laws would develop. The short and sweet of this is there are two major amendments which are sought to be made. One is by insertion of BBH 115 and another one is 56 to 10. We will make simpler by referring first to 56 to 10, that if you are in receipt of a virtual digital asset from a person who cannot be classified as your relative under 56(2)(7), then in such case, such a receipt would be considered to be an income in your hands and would be taxed under the head income from other sources. So this is one important thing, which one will have to keep in mind. That, and I have a little doubt over here, which all of you collectively, may in your leisure time may correct this, is that I hold a view that when a receipt is being sought to be taxed under 56(2)(10), there is a possibility of arguing that in such cases 115 BBH would not apply. BBH would apply in cases where, and now I am on BBH amendment. BBH is providing that if I am in receipt of an income, and it applies to all cases of taxpayers. It applies to all cases of taxpayers, all entities which are persons are also covered. So it applies to provide that if I am in receipt of an income on transfer of a virtual digital asset, then in such cases, such an income, would be taxed in my hands at the rate of 30%. It will attract surcharge at the applicable rates. It will also attract the cess, that is the education and the health cess, at the rate of 4%. This is what is the amendment which is sought to be, which is the insertion of 115 BBH. And when it comes, it doesn't come alone. When difficulties come, they come in twins. So here it comes in quadruples. So it then further provides that if I have losses, such losses will not be allowed to be set off, be that carried forward unabsorbed losses or losses of the year, then in that case, it would be not allowed to be carried forward. At this point, we will also take note of the things that there is also a possibility that if I have two transactions of transfer of virtual digital asset, and in respect of one, I have incurred losses, and in respect of another, I have received income, or if there are two different categories of VDAs which are transferred, one is NFT and the other one is your crypto, then in that case, in such cases, whether these losses could be freely adjusted against each other is a question which is already placed before the profession for kind consideration. I'm sure that that if the government is smart, it will very clearly put down its intentions clearly. And it would be laudable on the part of the government to hold that in cases of the genuine losses concerning VDA at least, such losses should be allowed, even though if it is, a clarificatory amendment, if it is considered to be an overcautious approach or over legislative approach, I would believe that that would be a welcome and a gracious things to do. As it stands today, there will be a doubt in a professional's mind, and trust me that there will be no doubt in the minds of the authorities that such losses will not be allowed to be set off against the gross income of VDAs. So this is as far as losses are concerned. It's further provided that no deduction in respect of expenditure or allowance would be made. No deduction whatsoever would be made, and what you will be allowed as a deduction would be the cost of acquisition of such asset. Now see, what happens is, in the practice of capital gains, when we practice section 48, we know that there are three things which are allowed as a deduction. One is cost of acquisition, other one is cost of improvement, and what is the third one? The cost expenditure on transfer of such an asset. And these three things are good enough for me to see that my net income is taxed in my hands. I'm comfortable, very comfortable. Now, if in computing these VDAs, if all of you collectively feel that it should be fine to hold that this cost of acquisition would include all such expenditures, which are incurred at the time of purchasing such asset. And if that be so, then those doubts relating to Those doubts relating to GSTs and incidental expenditure, including the brokerage and such other things, to my mind, should be allowed to be included in the cost of acquisition, because cost of acquisition time and the true meaning thereof has been examined by the courts, of course, for the purposes of 43, for the purposes of 48, the same definition, same understanding should prevail with greater force when you seek to tax this income independently, or independent of capital gains. So this is one view as far as this is concerned. The second is cost of improvement. I don't see there could be any cost of improvement, but if an expenditure which has the effect of improving on cost of acquisition, then I once again would hold that yes, that there is a possibility of adding this expenditure, even though it is incurred in the subsequent year, in the year subsequent to, or in the event subsequent to the date of purchase. So there, I would not give it up, see, because there is, I sense that there is a remote possibility. The third is expenditure relating to transfer. That is the one which is creating concerns. That if I am not allowed to read, because there is no provision. In fact, there is a provision to not to allow expenditure other than cost of acquisition. And therefore, it is here that I would keep my fingers crossed. And in some manner, if such an expenditure, if it could be absorbed by the purchaser of my VDA, then in such case, I would not have any difficulty. These are the views, say, in order to simplify the things right from the year in which these amendments are sought to be proposed, so that we do not whisper or practice something which is by giving up your own lawful right. So this is as far as the VDA is concerned. There are one or two things, say, which I would like to share with you. That this is, I would believe that 115 BBH as an application in the case where a transfer is made in the ordinary course of holding this VDA, which was otherwise acquired by way of a purchase. What would happen in case of a person who is in the business of manufacturing VDAs? There are people, see, right now who are internationally involved in manufacturing VDAs, by use of very complex hardware and by adopting complex software involving billions of dollars of investments. And assuming that, that back home, we have some people who have time and who have energy and who have also been smart enough to find out some inexpensive ways of manufacturing cryptos or non-fungible tokens. And for NFTs, there are already people who are expert in practicing manufacturing of NFTs, even in these countries. Now, in such cases, whether it would be possible to invoke and apply 115 BBH, maybe yes, that, BBH deals with transfer and therefore may also such cases, but would it be correct to have applied 150 BBH? To me, I'm very clear that for those persons who are in the business of manufacturing NFTs, cryptos, and such other assets, there should be a separate legislation and they should be taxed not by 115 BBH, but not by separate legislation, but by Chapter 4A, which provides for taxing such income, which is a business income, which is a professional income. If this is correct, believed to be correct, all of us should make out a case for such persons to claim huge depreciation, to claim huge expenditure, to claim huge expenditure on intangible assets creations. And if we do so, we perhaps would be the first country to take care of, such kind of taxation. Then foreign dividend income, for whatever it was worth, see, we were enjoying this deduction as far as the companies were, who were the Indian companies who were receiving this deduction. And the objective, if I believe, was at the relevant point of time was to ensure that these foreign companies, which were the subsidiaries of Indian companies, were not holding the precious foreign exchange outside the country. I understand that the government does not anymore. That's what is my understanding. I may be wrong. The government doesn't give two hoots anymore for the purposes of bringing in the foreign exchange for these countries. Your BOP situations are better, I am told. And also your balance of the forex reserves also is something which is handsome. And in the context of what is now happening in some corners, where under, see, the amendments not in law but in practice is being sought to be made in countries like UAE and Hong Kong, and also perhaps in Singapore. You would be in a very short time, mind my words, that you will be flushed with, see, that there will be no current account deficit in the context of forex, and you will be flushed with forex reserves. So if those practices or malpractices are corrected in those countries, which are the facilitators of funding the smuggling and other activities, if they are curbed at the right point of time, all these precious forex valuations, at least, rupee valuation, which is presently suffering seriously on account of misuse of these funds, which fly from this country, would be prohibited. And you will then in short time, you will have a case wherein the rupee will be rightly valued. Presently, it is valued at a rate which is not the correct rate. It is not on account of actual consumption by the Indian citizens, lawful citizens, but it is on account of those spurious players who are misusing this precious forex, and which has, though forex is not being issued, official forex is not issued, but it undermines the valuation of the currency. So therefore, if this is understood, these are the areas, frankly, see, advising people on tax is not sufficient alone anymore. These are the areas which are seriously plaguing the country in the matters of valuation. And you continue to be a country, see, which currency does not command respect worldwide. So in the new international forex regime, there is a possibility, especially after G20 resolution, to uniformize and provide for a minimum taxation of 15%. UAE is coming forward to legislate to provide for a tax which is 9 or 8%, but it still would be 9%. It still would be a step in the right direction. So there would not be a flight of currency, from this country. But once again, see, this is something I'm not competent nor even an expert to speak on this. The next is an amendment in section 179. Yes, but what happens is that in all these matters, see, as a citizen of this country, you are concerned and you would like to share these views, somewhere. And I consider Matunga CPE study circle to be one such platform, a few platforms wherein I would, without any hesitation or shame, would like to share my views. So 179 is yet again an amendment which is sought to be made with effect from 1/4/2022. One is that, that the important amendment which has any significance is that if there are fees which have remained unpaid, they could be recovered from the directors. Now, this could be small and meager figures. Why would you spend so much of printed ink in order to make such amendments? Government knows it, but it's interesting to take note of such concerns of the government. And now it has been clearly provided that, that application of section 69 is not restricted to liquidation. We have always been clear and told by the courts that the heading of a particular section does not decide the interpretation of that particular section. But government does this, and these kind of over legislations at times, in fact, they prove to be killer for the government, because the court will understand that whenever the government wants to provide, they have done so. So therefore, government should curb such over anxiety to bring in any amendment. I believe that there are people in North Block, see, who are not only working from home, but who have no work to do. And therefore, they employ and their occupation to do such things, which the legislature has not at least been able to curb. But that's all right. The second is something which I believe is an important amendment, being a real estate amendment. And it is one area wherein, people say that I understand a little more as compared to the others. And the amendment is that there is already an existing provision, which is 194 IA, which provides for deduction of tax at source at the rate of 1% in cases wherein the agreement value of the purchase of immovable property exceeds 50 lakhs of rupees. Then in such case, the purchaser is required to deduct tax at 1%. Purchaser is required to deduct tax at 1% on the amount of agreed value. And this was moving up very well. There was no hesitation, no difficulties in understanding it. Once again, a person who has no work in the North Block has come out with a beauty this time, holding that in case where there is a mismatch between the stamp duty value and the agreement value, 194 IA would require you to deduct tax as a purchaser at the rate of 1% on this higher of the two, that is AV or SDV, higher of the two. All right, see, one has no concern about it. The point is that the draftsman did not understand that this stamp duty value has been enjoying a safe harbor benefit, under the main provisions, that is 43CA, 50C, and 56(2)(10). You have a window of 10% adjustment. At least you should have been gracious enough to have looked into this when you had the courage to look into otherwise and incorporate it here. You should have given up and provided for a window A. Second is, see, it is not automatic. Courts after courts are saying that, when an agreement value is adopted for computation of capital gains, or for 43CA business income computation, or even 56(2)(10), the courts are saying, because there is an inbuilt provision, keep this in mind, inbuilt provisions. Courts are just wonderful in this country. You have not always to argue it rightly. They provide you with the right arguments. So they have on their own said that when you already have an existing provision, which requires you to permit, which permits you to make a reference, it should be understood that when an assessee has filed a return of income, by computing the income, by adopting the agreement value in preference to stamp duty value, then in such case, the AO should, even where assessee has not applied for it, the AO should have applied and made a reference to DVO. Now, such is the wonderful state of affairs in this country. So who are the persons who would not like to remain in this country? I would surely not like to leave this country, because this is the way the courts are assisting you, even when they are not required to do so. So if that is so, then in that case, in such a case, the amendment should have been gracious not to have provided for such things. You have, a window of 10%. In some of the cases, the tribunals have taken away. Following, this Gautam's case, CB Gautam's case, that this could be as high as 15%. There is a safe window which is expressly provided in this. And besides that, in any case, even if the difference is, why do you believe that, these governments, state governments, have the wisdom to legislate correctly when they come out year after year with a funny instrument called ready reckoner or circle rates? Supreme Court has clearly stated in the case of J. Jayalalita, Thalavi's case, that, the stamp duty ready reckoner rates are simply indicator, and they should not be adopted as a thumb rule. They should not be adopted as a thumb rule. If that is brought into force, Supreme Court just has to say the last word on the constitutionality of all these provisions. Have yet to say, though Madras High Court has accepted that this is a constitutional thing, but Supreme Court has yet to say, be that it may be. I think we have spent enough time on this amendment. The second is that, therefore, is TDS on payment to non-filers. In cases where you make a payment to a non-filers, you are required to deduct tax at a higher rate by applying the provisions of 206AB, and if you are a collector of tax, by applying the provisions of 206 CCA. In both such cases, now it has been beneficially provided that if you were deducting tax at source under 194 IA, IB, or 194M, and also under 194B, which has not been provided here, then in all such cases, the tax will be deducted at regular provision and regular rate provided under those respective prescriptions, and not under 206 AB and also not under 206 CCA. This is the amendment which I have already talked about. Care has been taken to admit that there were two drafting mistakes which are now sought to be corrected, which are of not much relevance for us, but it has now been provided that that would be not the case. TDS in case of business or profession, we have agreed to revisit the amendment in 28.4 and the VDA, that is 115 BBH. Continuing from the discussion over there, it is now provided that under 194R, that a purchaser of a VDR, while crediting the account or keeping it in suspense account or making payment, whichever is the earlier, at that point of a time, it is required to deduct tax at 10% when the payment is being made to a seller of VDA or the transferor of VDA who is a resident and which is for monetary consideration or even for non-monetary consideration. That I was told that, it is possible to purchase such VDAs even by making payments in kind. And while you are making payments in kind, you can use another VDA. You can use another VDA. If you are buying crypto, you can make payments in NFT. If you're buying NFT, you can make payment in some other NFT. So all this is possible. Then in such cases, it has been provided that if the consideration payable for such an acquisition is 20,000 or more, 20,000 is more than 20,000 rupees. Please look into this carefully. 20,000 or more, I believe it is more than 20,000. Then in such case, you are required to deduct tax at a handsome rate of 10%, which is a substantial amount, without deducting anything. And when the payment is being made in kind, partly or otherwise, if it is being made in part and if some balance is being made in cash, then to the extent of cash being made, to the extent of 10%, it will be absorbed and adjusted. But if the payment is being made fully in kind, then the payer has to ensure that the payee makes the payment of tax in filing the return of income. Until such time, he will have to keep his fingers crossed. How would he gather this information? I am not aware of it. Presently, no provisions are made for that. And how will an assessing officer ascertain? How will an assessing officer would ascertain that when payment was made in kind, the purchaser of the asset has ensured that he has paid taxes? You will have to look in his 26 AS and whether that even 26 years will not be able to reveal that whether he has paid adequate taxes or not. So this is a minor anomaly which we have discussed. So TDS, so before that, was I discussing something else? Yes, yeah. No, now we would proceed further. Just on default. This is an interesting amendment which is sought to be made. Which is sought to be made at 3 places, I believe. With one amendment, 3 situations are sought to be covered. Ordinarily, a person who is in default on account of payment, on account of not deducting tax, on account of deducting tax, but delaying the payment thereof, or on account of deducting tax, but paying it, not paying it, then in all such cases, all 3 situations, the person would be treated as a person who is deemed to be in default. And when he is deemed to be in default, he is liable to pay a penal interest, which is known as 201 capital A interest. The government believes that there is some controversy as regards the period for which the interest is to be paid. If one would read, if apparently also, not necessarily brilliantly, I don't think I entertain any doubt the period is defined for me and I'm paying interest for that. But in government believes that in the matters whenever there is a possibility of any debate for the period for which such interest would be paid, then in that case, AO's view would be final. AO's would be final. You will not be allowed to seek a rectification. You will not be allowed to seek an appeal also, file an appeal also. So to cut the matter short, that I will not rest here. I would nonetheless apply for rectification. I will encourage him to reject my petition and thereafter file an appeal against such rejection. I don't like any amendment which provides for no appeal, no rectification, no revision. No appeal, no rectification, no revision. We are a democratic country. And when I know that, okay, the other side made a mistake, has made a mistake, legal or apparent, in both such cases, there should be a remedial action permissible. That should always be a remedy. And when it is not so, though Supreme Court has famously said that filing an appeal is not a right. If it is not a right, filing an application for rectification is something which is my right. I would consider it to be an apparent mistake when the period is wrongly calculated. And therefore, I would file an appeal against that. And if that is not so permissible, I would still file a writ petition in the High Court. I would keep all four alternative remedies open for my practice. Search, season and survey, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 amendments which is being made. These are matters of serious interest for me because for some reason, see, I have always liked these provisions, not to help those who are making serious lapses, but to understand and to ensure that, that the government do not err on the wrong side by punishing these people who otherwise have not defaulted. But today is not the time to take you through these 8 amendments. Please look into them. Some of them are important amendments. 79A is something which I have talked with you. Other important amendments are in the form of 132.8 and 132B, wherein these provisions are now made available for the purposes of assessment 2, also for the purposes of reassessment 2. So please look into that for the purposes of 148, 148B and 148, 149 and 153 also. These amendments have important significance, but discussing them would take perhaps 10 to 20 minutes, and therefore, with your permission, I am skipping this amendment, but I am dutifully inviting your attention to any of these. If you ever have any issue concerning these, do write to me by an email and we will surely respond to that. The next is a related amendment in 133A. It is matter between board and the authorities. There are certain egoistic issues that who are the authorities who can authorize survey, and the board can now put it to the rest. Return of income. This is an important or an amendment which is believed to be important. I personally consider it to be a very important amendment that has been sought to be introduced. I also considered it is giving an opportunity to an assessee who has made a mistake or who has lapsed, deliberately or otherwise, to come forward when his conscience has been jigged and, he is coming forward to make amendment. I also personally believe that, the payment of 25% of tax is a reasonable tax. I also personally believe that asking a person to pay 50% of additional tax is an unreasonable tax. And I would request the government to change this and peg it down to 25% to ensure that not only the person on his own will come forward to correct the error within a period of 3 years. It is being said in some of the religious texts that you are allowed to make a mistake 3 times, and thereafter the God will not pardon you for the 4th mistake. Similarly, in some corners, it is also being believed that you may be pardoned for a reasonably longer period, and by allowing you to be sleeping over the mistake. But after that period, if your conscience is not corrected within that period, then you should be ready for the punishment. And I firmly believe in all this, religious or otherwise. It gives you an opportunity to correct yourself. I make mistakes every day, but I also largely correct them. I would not like anyone to be judgmental about it. Mistakes are mistakes, and they happen in the heat of the moment, and they sometimes happen in the course of practice also. Need not necessarily be always out of my greed, but it might be out of somebody else's need also. In all such cases, there is a need to permit a person to correct it, and allowing a person to file an updated return is one such thing which should be welcomed with open hands, subject to ironing out some of the pettiness which is being sought to be exhibited by the government or the legislature. That pettiness, if it is taken care of, this would be one of the wonderful thing which would. You don't need to permit somebody under 271 AAC to come out and make a declaration. You don't need to, take the pain or the strain of visiting somebody and terrorizing him with some investigation. There are people with good conscience, who will come forward, and 36 months, mind you, the window is not 24 months. This also make it clear in your mind right from day one. It is 24 months from the end of the assessment year. But my failure starts from the end of a year itself. And therefore, the window which is open to me is that of 36 months. And when such a beautiful window is opened, if I am allowed to correct my mistakes on my own or even by an invitation, as long as there are no pending proceedings, and I would believe that, an invitation outside the proceedings, a case of a simple inquiry, which the authorities themselves believe that they are not assessment proceedings. Then in such case, I, for my limited wisdom, would take a view that filing a return by itself is not commencement of proceedings. Though I am absolutely conscious that there is a possibility in context of some of the provisions, there is a possibility of taking such a view, and I myself have practiced such a view. There is also already in existence in a short time of 1 week of another professional view equally formidable, which has taken a view that yes, and very respectful persons have taken a view that this is the proceedings may start with filing of the return of income. I would take a view that, the lapse, if at all, would start only, if at all, even assuming that I were to concur with this view, it would start only after expiry of the period under section 139(4) and 5, and not before that, or under 139, 1, 4 and 5, and 3 is otherwise not relevant here. Having said this, what are the provisions? Let me place before you is that if you have filed a return of income, or if you have not filed a return of income, if you later on notice a mistake or an omission also, an omission could be something beyond mistake. It could be deliberate, it could be not deliberate, or it could be something, say, which would be purposeful. In all such cases, a person is allowed to file an updated return within a period of 24 months after the end of assessment year. After the end of assessment year. So first lesson I am learning for me is that up to an end of the assessment year, whatever I am filing may not be considered as an updated return. It is a roundabout way of understanding the provision, but I would like to, stick to what I am suggesting, that in the first year, it would not be an updated return. It could be a 139(4) return. It could be a 139(5) return. Independent of Jagdish Prasad's decision of the Supreme Court, Prasad or Chandra, Jagdish Prasad or Jagdish Chandra's decision, which has taken a stand that yes, that a belated return cannot be revised. I would sail with that, but I would say that as far as updated return is considered, my time or my innings with 139(8)(a) would start from the time when I end the assessment year, and thereafter the innings would begin. But that is not very consequential. It's too technical. And I'm sharing it with you just for reiterating my understanding for my benefit alone. So coming to this is that if I were to file this updated return covering any income, there are 12 cases in which I am not allowed to file an updated return. We will examine them. But otherwise, I am allowed to file a return of income, saying this is a return of income, updated return of income. We will loosely refer it to as return of income. Then if it is the first assessment year, post the end of the assessment year, then I will pay 25% of the A differential tax. Differential tax is not defined. I have coined it out for simplicity, that A, on my regular income, which I have included in my return of income, I am paying regular tax. Once again, not the regular tax as we understand in our practice, total tax under 148A or otherwise. Thereafter, I would pay for further tax, which I am, for simplicity, coining it as differential tax. That is tax on my additional income, which I am including in the updated return of income. To that, I will also add the fees for having filed a late return of income or any other fees which is there. Plus, I would also pay interest, 234A if it was there, 234B it was there, 234C also it was there. Calculating 234B interest should not be much of a challenge. However, calculating 234C interest is a challenge, and I would request the organizers to take up such challenges after the law is enacted, because it is little premature to take your time, the collective time, in discussing such mundane things. The right thing is for the government to concede and say that 234C interest would be in respect of the additional tax alone and not even in respect of differential tax. But that is, I could have a different view. So coming back to this is now known as a 140B tax, which comprises of two things. And if you look into 144B, you will shudder, the way it is drafted. It is giving very, very different ideas, but it is not surely expressing or legislating the intent of the legislature in words clearly. Be so it may be, I am clear in my understanding that the intention of the government here is to ask you to pay differential tax, which will also include interest and fees, and to ask you pay 25%. To ask you pay 25% on the entire differential tax, including surcharge, cess, interest, and the fees. If you do so, you are welcome to enter into this new heaven of the persons who have made some error by correcting them. Few things, what it is being provided is that what are the disabilities. But before that, I would like to put up before you consider for you is that A, the updated return cannot be revised. B, if there is a defect in an updated return, that would be a 139(9) return, and the AO would be duty bound to provide you with some time limit. C, an intimation whether it would be considered as a proceeding, pendency of proceeding, whether it would be considered as a recomputation or otherwise. I would like to keep my fingers crossed, especially if it is a computation under 143(1) by way of an adjustment, and 143(2) proceedings have not yet begun, because in the context of 139(4)(5) especially, a view has been taken that an intimation is not an order or therefore not a proceeding also. Once again, I am taking a little convenient interpretation, so you may pardon me for that, but trust me that it would eventually turn out to be useful for the taxpayers and the petitioners. So 143 is an open issue, but in such cases, one would take a view that till the time 143(2) is issued or 142(1) is issued or an investigation takes place, the proceedings would not be considered to have commenced. While we are at it, we will also take notice that there are important provisions for issue of notice under 143(2), which are providing limitations in time. In all such cases, when you are written, even within a period of 3 years, how would you bring into operation 143(2)? The correct thing is to provide expressly for such situations. Similarly, 149 also has a limitation of time. 153 or 153 also has a limitation of time. Ignoring the first return is an issue by itself, whether that is possible or not. And when you have filed an updated return, should the AO start with considering the updated return, or should he start first with 143(1), 139(1) return, and then take into consideration, decide the issue of concealment, which is now not so, but decide the issues of unreported income or misreported income are very, very interesting issues that would come for consideration in the years to come forward. Carrying it further is that provisions, as I said, would not apply in 12 different situations. 12 different situations which are differently worded, for some curious reasons. For two, they say that, provisions themselves would not apply. And what are they? In cases where a loss return is to be filed, or any updated return is resulting into decrease in tax liability or increase in refund on account of the updated 139(8)(a) return. Then traveling further in a different language, it says you are not eligible to furnish an updated return. And that is the cases of search cases, survey cases, or third-party search survey requisition cases. Search cases, requisition cases, survey cases, or where the AO is of the opinion that where the action is taken in a third party, but he has found something which is belonging to yourself, then in such case, this is an eternal wait. But in such cases, I am afraid that you would not be permitted to file an updated return. I think there is a need to refresh this provision, but right now I am in no mood to discuss that. The further is that, when books of account, I have already discussed with you, are requisitioned and you are found to be the owner of the income belonging to such books of account. Then the third category is that A, the provisions are not meet applicable. The B, you are not eligible to file updated return. So 2 plus 4, 6 we have discussed. Now there are another 6, and that is what it is provided. No updated return shall be furnished. Now look at the language, see 3 different languages in the very same amendment introduced in the on the same day by the same finance minister, perhaps drafted also by the same person. So when I have furnished a return, and if there is a pending assessment, reassessment or recomputation, I have taken a view that recomputation which is being talked about outside the window of reassessment as the law today is, it is not possible to recompute an income independent of reopening. But if I have skipped some provisions where under a recomputation is permissible, I'll be happy to be enlightened. And then in that case, we will refresh our thoughts. But what sum and substance is that if there is something which is pending in this nature, then in that case, you cannot update. Sorry. Then if the AO has communicated the information before filing the updated return, in some manner he has communicated the information stating that he is in possession of information. See, now 26AS cannot be considered as a communication of information. It's something which is uploaded on the portal of the asset and which is in public domain. And I would, for the purposes of application of 139(8)(a), would not like to consider this as an information. You could have surely a different view, and I'll be happy to see that you have a different view. But my view is that it is not a communication of information. Third is that that communication of information should be based on the action under SAFEMA, Benami Properties Act, Money Laundering Act, or Black Money Act. This itself shows that it is not a 26AS information. It is an information which is received from the authorities appointed under different statutes. Under PBPTA, it is possible that you are the same authority, but you still are functioning as a different statutory authority. And therefore, you still will have to function of communicating the information to me. Make no mistakes. This is the correct interpretation. I am, based on my experience, I'm sharing this for the reason that, otherwise there would be floodgate of cases wherein the government would claim that I have communicated to you that I am in information. It is time to bury them in the beginning itself. Then you have an information which is received under an agreement under 90 and 90A. Then whether under taxpayers information treaty or otherwise, then in that case, there would also be a need to communicate such information. If you have received something from HSBC or the government of France, then in such cases, or Germany or Switzerland, in such cases that will have to be demonstrated before I am being punished or I am being prohibited to file an updated return. Mind you, everything should be done by the government of India to encourage a person to file an updated return. Once you have initiated a handsome provision, why discourage a person? No courts are going to tell you that, this is a VDIS. It is not a VDIS. It is not a VDIS. It is some other window. And I would congratulate government to have invented that there is a window or created a window in a dead wall. And with that, providing some fresh air and light, for those persons whose conscience is changing. So it is good. When prosecutions are pending, I have no doubt you should be discouraged from filing updated return. But having said that, it should have limited to say that, if the color of income is different than the color of income which or for which prosecution is initiated, in respect of other income, let us come together and close these. As a nation, we are not in the business of litigation. Nothing is gained, even for the serious practitioners of litigation like us. Nothing is gained, see, by promoting litigation in this country. So wherever there is a remotest opportunity to curb the litigation, rise to the occasion and curb the litigation. That's what it is. And when you know that, and once again, I am saying it with full respect and understanding, that more than 2/3 of litigation in this country is because of the authorities who are the guardians of the practice of the statute. They are the ones, they should have informed me that there is a mistake in not claiming a relief which is otherwise allowable to me. Instead of doing this such a noble thing, they are the one, they are punishing me for an offense which I have never committed. They are suspecting that I am a thief, which I am not. There could be few persons who are practitioners of defects, see, who are practitioners of crime, who are sinful, but not all, not us. So in such cases, there is an opportunity to create an atmosphere of trust. You might feel that, which you have been hearing for donkey's years. But with the intensity with which I am sharing, I am allowed to repeat these words today also. And please follow this. That when CBDT also prohibits a class of persons, then in such case also, with this I am completing those 6 disabling cases, which in aggregate are 12 disabling cases wherein you are not permitted to file the updated return of income. Even if I am just a lowly assessing officer, because the PCITs and CCITs feel that they are superior authorities, in my mind, there is nothing superior or inferior in this entire practice of laws. Professionals wise or also otherwise authorities wise. It's that by destiny or design, we all have agreed to do different works. Somebody looks after returns, somebody looks after audits, somebody looks after assessment, somebody looks after litigation, and some people looks after advisory and consultation and opinions. We are no different. We are no different when I practice domestic law, and I am no different when I practice the international tax. Let these fiduciary divisions clear, so that, whatever I do, I respect my own work. Whatever I do, I respect my own work. My confidence starts from respecting my own work. As long as it is lawful work, it is bringing me lawful revenues, I am allowed to practice this with elan and with trust and confidence. These are just the tables which my office has helped me in placing before you for correcting this. This is also this, what are the provisions which I have talked, how to compute the tax, which is an exercise by itself, and therefore I have taken care to put it before you. In between, we also have prepared a chart, of a CPE or a PERT flow. I don't know why it is not visible today. There must be some slip in the presentation which I am using today for you. Maybe in the times to come, I will mail the corrected one with you, and the circle may circulate that. Assessments, see, there is an important amendment which is made in 143(2), which has gone unnoticed, which was there in the form of third proviso, but the scope of it, which is largely extended. And there I consider that it is required for me to present it before you. short and sweet of it is that when an assessing officer in the process of assessment desires to deny the benefit of section 10 into all these cases which are placed in the presentation, in all such cases, if he desires to deny you the exemption, he cannot, just by default do so. He will have to intimate it to the central government in 1023C cases, or in some other cases, or in 12AB cases, he will have to intimate it to CIT or PCIT that he proposed to deny the exemption. He proposed to deny the exemption. And he should also make a recommendation to central government or the CIT or PCIT requesting him to cancel the registration or withdraw the license or a permit which has been given. All these are interplaying with each other. Then in such cases, that when these twin things happen, that is, he has forwarded the proposal to withdraw, and the authorities to whom the proposal has been forwarded has acted upon it, either by agreeing to cancel the registration or by refusing to cancel the registration. Some wonderful amendments are sought to be made. And in such cases, only thereafter, he can proceed with the assessment. There could be some procedural difficulty or a lapse, which would be corrected in the times, because let the authorities who are required to practice this thing, find out their own ways instead of professionals always guiding them and providing them with the solution. Third proviso as a consequence has now been deleted, and that is in 143.3, third proviso has been deleted. Faceless assessment, something wonderful is happening. The government is realizing that in the matters of mistakes and errors, they are the first one to make the mistakes and errors. And they make huge errors. Within a short period of just about 1 year of having legislated 144B in a massive manner, in one of the exercise, which is the largest exercise which I have seen in my practice on introduction of 10 subsections of 144B, again introduced with a great fanfare, again introduced after having exercised the practice of understanding faceless assessments for a period of almost 5 years. From 17 onwards, they have been practicing it in 1 year, one form or another form. And people who claim that they have now mastered the art of faceless uploading and otherwise, they have admitted that, entire 144B 1 to 10 was a mistake. They have admitted that they have faced with administrative difficulties. The procedure which they have prescribed requires streamlining. They have faced that there are legal and procedural hurdles, which there is a tacit admission that they are unable to overcome unless they are permitted to revamp the entire scheme. If this is not an admission, what other admission could be there? And I am happy that government is admitting this and doing it in time. One or two unfortunate things have happened doing so, which is customary for the government, to do such tweaking and not gracefully do it. But pardoning that ungrace, if you would see what has been provided now is 1 to 8 are totally changed. 1 to 8 are totally changed. Some of the amendments, there are 32 amendments in 1 to 8. Some of the amendments, if you look, they are just, replaced from one place to another place, which again is a bureaucratic exercise, which really lords their ego. But other than that, nothing further is gained out of it. But the major amendments, and two only, I wish to bring before you is that 144B9 is scrapped, is not reintroduced. Where 9 used to provide that if there are mistakes or lapses committed in implementing 128, then in such case the order which is passed by virtue of the lapses or the mistake will be a non-est order. What best one can hope. This is how it was provided for, and that is the reason that one was supporting this faceless assessment, that if there is a mistake, admit that it is a non-est order, and the courts after courts in disposing thousands of petitions have stated that when you have not issued a draft assessment order, please pay attention. When you have not issued the draft assessment order, or when you have not the draft assessment order, when you have made additions to or made variations to the draft assessment order, or when an opportunity of hearing was sought, you have not provided for it. Then in all such cases, and besides some stray cases of applying another 29 conditions, the courts have very clearly held that all such orders were non-est order. The courts were kind, in my opinion, by not knocking down these orders forever. Courts have given them a new opportunity to refresh the order by correcting the lapse. Some court someday may take a stand, and some litigant may take it to Supreme Court further that I am seeking a complete non-est. Those powerful persons who are required to administer the law, if they mistakes, why should I be punished? But that is a different story. Today we are not discussing that. Then in such case, yes, that 194B9, when it is sought to be, deleted forever, omitted forever, do I really have the complaint? The answer is I have a complaint, but I have a small complaint. I do not have a major complaint for the reason my small complaint is limited to the fact that it is being sought to be done with retrospective effect. Please don't do this, do it with current year. And as far as the lapses which are made retrospectively, allow the courts to hold that they are lapses. Don't shackle the hands of the courts, by saying that, that they are retrospectively amended, they are not lapses at all. To me, no court worth its dime would ever respect the retrospective amendment. These three situations which I have listed before you, and we have mind you, we have filed number of petitions, and in most of the petitions we have succeeded, wherein the courts have said that all this is bogus. Don't do this. Courts have come out heavily against them. And in some cases, the courts have given ad interim orders to stay all these orders long back. In some cases, the courts have said, Mr. AO, please be warned. Don't proceed. The AO says that, look here, sir, my time limit is expiring. The courts have still said that, so what? You have made a mistake. We will not allow you to, utilize the time limit as a gap for the purposes of concluding or perpetuating a mistake which you have covered. So be that it may be, I'm not talking for myself, just expressing to you that 194B9 would be considered as prospective. And for prospective application, it has no teeth to bite. Now, 128, the new prescription very clearly provides for service of a draft order. My first difficulty is ironed out. For the draft order, my second difficulty is ironed out. For giving me an opportunity for hearing, my third difficulty is ironed out. Now, thereafter, if you enjoy, having small victories against me, I would grant you to have such victories as long as you cannot harm me with this. So this is as far as 194B9 is concerned. In ordinary circumstances, I would have taken you through all 32, which is my practice. I like to do that. But today, I may be pardoned because I am already now, on a fast track mode that I would try to move little further. faceless assessments, whatever I have required, I wanted. But few things I want to bring it to your attention, even though it is procedural, and for which I have a chart, the flow chart is that there are 4 units which are sought to be amended. The first major amendment which is made is regional centers all over the country are abolished. Their sub-regional centers also are abolished. That's one. Second is that there is everything would now be processed through NAFAC, National Assessment Faceless Assessment Center. This is the one which is the sole authority, which is my AO. Everything will function through NAFAC, and NAFAC is faceless. NAFAC will function through assessment units, 4 units, assessment units, verification units, technical units, and review units. All this is very important for you because you are not going to discuss it again. Not many professionals would have time to discuss this with you in their presentations. So therefore, pay some attention and understand. There will be NAFAC which will communicate with us. All my notices, all my show cause notices, all my computation of variations, and all my assessment orders would be through NAFAC. NAFAC, if it wants, it will function through assessment unit. Assessment unit can function or take help of verification unit. It can take help of technical unit. It can take help of review unit. But none of the findings of any of these subunits would be binding on the assessment units. And even when assessment unit has done something, the NAFAC necessarily may not do everything unless it shows you with a show cause notice. And the reply which you give to such show cause notices, and mind you, there are multiple show cause notices. When you reply to these show cause notices, that show cause notice reply will have to be brought by NAFAC to the attention of AU. And AU will then take a final view and then will forward it to you. So this has been put it into the form of some pictorial representation that how units will interact. But the central authority is NAFAC, whatever you would like. It is the face, whether you would like to call it as a face, it is the unit which will always talk with you. It will be the unit. It will only be the unit which will permit even opportunity of hearing. And at that point of a time, it would be possible for you to act through NAFAC and act with these units, any one of the units. Yes, Anuj, I believe I am keeping track of time.
Yes, sir.
Yes, no, yeah.
So it's almost 12:30 past. So
yeah, is it? Then in that case, what is happening is that, yeah.
We can take for 15 minutes.
Yeah, if you give me 15 minutes, I'll try to rush you through that. Yeah, I'll try to rush you through that, and that is all right. There are 3 cases.
If you want more, we don't mind, sir.
Yeah, what had happened is that, this is a personal thing. I am today invited for lunch, see, at BKC,
Okay.
From someone who is very closely and a person who is dear to me. And that is agreed to be around 12:30. This was before we had agreed to this revision of arrangement. So I would try to rush you through this, but let's see that whether I succeed or not. Yes.
Anish bhai has requested up till end.
All right. And if instead of requesting, the great man should have agreed to lead us today, it would have solved all the problems. Okay. And not making it conditional. See, he is a person who is master of conditions. But dear friend, see, right now. So something, see, one would like to always be happy talking to him. So coming back is here. But what I can do is, I can assure you, not only in the matters of this representation, but in many other walks of life, perhaps, whether I am his mirror image or he is my mirror image. Whatever his vanity permits, I am willing to accept that. That if I keep something incomplete and he would like to continue, which would be a welcome change in our presentation. with the remaining parts of the slide, and if the administrator permits him to monitor the remaining slides, I'll be very happy, that, because yes, there are some very important amendments made. I have put all of them. I have not run away from anything. I put all of them perhaps in a more orderly manner than what the memorandum has placed, to make it simpler and clearer. That, there are these amendments are in the era of reopening and reassessment, and also in the matters of charitable trusts and institutions. They are the ones, we should not be ignored. There are few amendments which have been made in the fields of prosecutions and penalties and prosecutions. So kindly see that, in 10 or 12 minutes, I can at least rush you through. If you allow me to share with you the heart of the amendment, things would be simpler. And I hope that you trust my judgment in rushing you through that. That, three schemes of faceless assessments are deferred. I have placed it before you. Reopening and reassessment, the first major amendment is that when an order is passed under 148 AD, at the inquiry stage itself, in respect of search, seizure, and survey procedures, then in that case, for issue of notice under 148, which is a stage subsequent, you are not required to take once again an approval of the superior authority. I believe it is a good riddance of an unnecessary multiple approvals that were required to be. Then continuing with notice under section 148, important amendments, mind you, important amendments are made, because the whole story of 148A and 148 is all about receipt of information. So there now, originally we had only two cases wherein you as an AO could receive information. One was from RMS, that is Strategic Unit, Risk Management Strategy Unit of the board, which is yet not in my information constituted. And the another one was audit objection. And audit objection only when it was from the Comptroller of Auditor General, stating that the assessment order is not framed in accordance with the provisions of the Act. So it was very tight provision. And in a short time of just about 1 year, it was pointed out to them long back by us that you are making a mistake by limiting the scope. But they were so comfortable, in love of their own drafts, they enacted it. In a short period, they have realized that even other information, including deemed information, will have to be taken into consideration. And now once again, you are in a situation where there are about 10 cases of information which are all dutifully listed in slide in very simple language. Kindly look into it. The important thing which is sought to be made is that even in case where the information in respect of an occasion or an event or an expenditure. See, a person who has spent crores of rupees on an event or an expenditure, and if it is not represented by an asset, and then you say it is not an information, or it is not found out by your RMS, an obscure RMS sitting in an obscure place, who doesn't want to show his face, be brave to show your face, interact with us, and we will explain to you that not only we are decent people who respect your strategies, your information, but we might supply you with some better information, and we might train you to help to how to collect such information. But be that it may be, now it has been so provided that the cases of 133(a)(2)(a), also cases of 133(5), and any other information which comes in by way of there is a very interesting provision called 135(a), which most of us, at least me, have ignored. Now, this is a provision which tells you that how to collect information by the authorities and pass it on to AO. So besides RMS, there is some unit which will be functioning in a faceless era and will also be continuously feeding the AO. Whether to act on it will be final decision of AO. And that is something which is left open. 132.5 is now covered. What is now provided is that information would also not be presumed to be information for the preceding previous years. Very good amendment. That it would be presumed to be information for that year. So you will not have a tool or a handle to reopen indiscreetly. You will have to exercise discretion like what you and me have been exercising for donkey's years. Then there is 148EA amendment, which says prior approval is not required when you have taken a approval for issue of a show cause notice. We also don't want you to take prior approval, because if there are six places where prior approval is required every time in appeal, I will challenge whether you have taken prior approval, whether it is judiciously given, whether it is given in time. All these would be subject matter of unnecessary litigation. Put it at one or two places, the assessees and the tax advisors trust you for your wisdom and will grant you the discretion. We are not against you. So therefore, it is now provided that in the following cases, which again are properly listed, it would be the case of receipt of information and further approval would not be required at the initial stage of conducting inquiry under section 148A. If you decide to be in practice, which I am sure that you have decided, it is your own choice. Please read all these sections. I know that many of you have not even read 148A, not read the amended 148 and 148. Don't rely too much on your friends. Don't rely too much on Singhania or Master Guide. Read the provisions, understand them. Discuss it with your friends, have your own views. See, if you want to practice, because you are here by choice, nobody has forced you to do it. And this is how the practice it. The only discouraging factor which I have found is that we over the years have not found the ability to charge for the time and the energy which we are using for practicing such complex laws. There are bigger firms who have found this courage to not to please, see the clients by feeling that they will be displeased. Don't feel so. And if the persons remain continuously displeased, allow them to, go away from you. Do it the way you like it. Value your time, as has been famously being said by our the biggest advisor, Pinakin Bhai Desai, is that you are charging at the rate of plumbers. Even less than that, now plumbers are also charging in thousands for 1 hour or 2 years, or electricians. Rise and do it. There are better things to do in life. Assuming that for some time you're not being paid properly, at least, introduce a practice in your office of keeping a timesheet and value your own time, value the time of articles. See, don't time them at 100 rupees or 150 rupees just because the institute is allowing you to use them or misuse them or abuse them. Respect them, see, respect their time and charge for that. Let there be clients not paying for that, but let them at least realize that what valuable services you are providing. Mind you, those who are in the practice of practicing municipal laws and revenue laws and stamp duty laws charge much more than what you are charging. So change attitude. It applies to me also. It applies to my wife and partner also. There is no, every day I have to tell her that, look, what are you doing? Simply because you are charging so at least revise it after 1 year and respect your own time. But then, see, this would come the hard way. All of us who have practiced since so many years, we are in the bad habits, but those who are in the new practice, not many people are taking an opportunity to practice these laws, which are wonderful, which is wonderful practice. Only request is price yourself correctly. And during that period, if you are not allowed to price yourself correctly, use the remaining available time for doing something else, which is equally valuable. You might handle your investment and properties, even that is not a crime, to take care of it, and it might perhaps give you income which is much more than your regular income. I'm not at all advising you to do that. I'm saying for some reason you are not able to price your product properly and therefore not able to get it back. Don't run to serve people who don't require to be served. Don't run. You are helping people who otherwise have plenty of money. Trust either way, but do so. Carrying it further, Anuj, thank you for showing your face. Yeah, then there is 148, continuing with that prior approval. This is a new section which is provided, wherein, for passing the order also, now the order is to be approved by the higher authorities. If they don't, that order is not correct. Then time limit is tweaked. I have in bold ink provided that what is the new time limit. Then this is an important amendment. 156A is introduced that on account of an order passed under IBC, Insolvency and Bankruptcy Code, if the demand for tax is reduced, now AO is empowered to issue a new demand, which is a 156A demand. Appeals revision and DRC is that this is an important amendment. 239A, 248 is reduced to 239A. Instead of filing an appeal for refund, you will now make an application. Avoidance of repetitive appeal, I have very carefully explained to you what is the present provision and what is the change. The short change is that so far you were permitted to defer the filing of appeal against a CIT appeals order. Now you are also permitted to defer the filing of appeal not only against CIT appeals order, but against the ITAT's order. But important change is that even where there is a question of law for which there is a favorable decision in respect of some other assessee of a jurisdictional high court, you can defer filing of appeal, and this will reduce the litigation quantum for the time being by at least 33%.
Pradip
Yes,
bhai, sorry to interrupt you.
Yes, yeah, Jiten.
Can we had decided one date na, for next Thursday. So can we continue with all your slides next Thursday and then questions from members?
Jiten. I am just concluding. I am sorry.
Because we have received some requests from few members. That's why I'm sorry to disturb you.
For what?
That we had announced that date, na, Thursday. At that time, you take your own time and complete your slides, and then we can take few questions from members.
Okay. Please do two things. One thing, ask TP and Anish. Besides, of course, 5 of you, if all of you are in agreement, and if you give me 30 to 45 minutes, I should be fine. And then I'm happy to do this. Okay. Don't worry about it. If you give me just 45 minutes, and if these two of these gentlemen agree, we will continue with that.
Today or on that day, Thursday, right?
No. Do they agree to defer the discussion?
Anish bhai, TP sir, are you there? Unmute karo na. Anuj, please unmute Oswal ji and Anish. Right?
Pradip, we agree with you, and you should take threadbare again on that Thursday, whatever time is convenient to you.
All right.
It will be great because you have taken so much pain to prepare all such slides beautifully, and your threadbare discussion really carries a great weight for all of us.
Sir, your wish is my command, so we will do so. Okay.
I second Oswalji's suggestion completely. I think if Pradip agrees, I think
Yes.
Pradip has to agree. If he is
Yes.
agreeable, yes, we are agreeable
Yes.
to, invest the additional time.
Yes,
No
yes.
problem at all.
So why have a caveat if Pradip agrees? You are in the business of ordering me always. So yeah. so
Then,
yes.
then let's do it.
Okay.
Pradeep, between
Yes,
the friends,
yes.
we don't order each
Yes.
other. We only,
Yes, yes.
we only
Of course.
state.
No.
We don't even request. We state. That's all.
TP. See, we
TP,
all
I
are
am okay
blessed.
to order Pradeep if he be ordered.
Yes. See, TP and Anish and Jiten and Anuj and Arif, and so Pranav. I'll tell you that, whether you or me, we are blessed professionals to be a part of Matunga CPE study circle. I am associated with this circle since its beginning. And I have found that there is no other association. And mind you, I am not saying this very loosely or to make you happy. I travel all over the country to different remotest part of this country. And I have had the opportunity to interact with all kinds of associations. You are the best. You are the best. We are the best. Say, right? There is no animosity, no rivalry, no jealousy between our members. See, when I say that, okay, ask TP or Anish, friends, I can always call them up and ask. And they also, when they said we are ordering you, they also knew that I will always respect their wishes. Such kind of unified fusion is not there in any association. I'm proud to be a part of you. Thank you. Yes, so for today,
Thank
we
you.
would
Thank
conclude.
you.
Yeah. Thank you. Yes, Jiten, please take over.
Yeah. No, yeah.
Yes. Pradip bhai, I must at the first instance say that this was not even a marathon but a ultra marathon session, and of course there is a part 2 of it coming, and I think so we'll reserve the questions for the session
Yes.
when we take next, and with your permission, it will be scheduled on Thursday 5:30 p.m. onwards, and the further information of the entire session will be circulated with the members today itself. And then with this, I would now request Pranav to propose an interim vote of thanks to our speaker.
No, before Anuj,
Yeah.
Anuj,
Great.
you can request members to send the question in advance
Yes.
so that it will be useful.
Yeah.
Yes, sir. We have told, and we will
Yes.
once again remind the members to send their questions to us in advance, and we'll collate and share them with Pradip bhai for
Yes.
his
Yes.
analysis and comment.
Okay.
Pranav, over to you.
Then why can't you defer the? Let me deserve it, say. Yeah, right. Na?
Sir,
This idea is interesting.
Pradip bhai, this vote of thanks is not for today. It's for the entire last 25 budget sessions that you've held.
Okay.
More
And
than 25.
it's
Yeah.
just that I am getting the opportunity for the first time, so I would be eager to do it today. A very very big thanks from the entire study circle. What was important? So like this is just something that I've realized that you have explained the budgets of the last 10 finance ministers of India, and I think understanding each government's, each finance minister's take on the budget and the policy thoughts that they have, giving us a very holistic understanding. That is something that is so commendable. And it's you're not looking at it just as a CA who would just give a technical argument, but an overall understanding of what the thought process behind it is. Sorry, there is some disturbance.
Swalji.
Very good.
Oswal.
So yeah, I think it's really great. Behind budget and not just reading the finance bill as an amendment to the Income Tax Act. Now the confines of the professions the boundaries are going beyond the Income Tax Act, and understanding everything holistically is so important. And I think that's what you've provided us. So thank you so much, Pradip. It was an honor to be a part of the session.
Yes, sir. Thanks a lot.
Thank you very much.
Thank you, Pradip bhai.
Thank you.
So with this, we conclude today's session, and we look forward to everybody's participation on Thursday. Yes, sir.
Small request. Please do not consider it to be technical. Just send me a letter, for appointing me to address this. Yeah, thanks so much.
Yes, sir.
And that screen that is top is TP.
Yeah.
So it is.
Yes. We would not miss.
Okay. No. TPO.
TPO, right?
TPO,
yes.
So he has given you orders, sir.
Oh, yes. Thank you so much.
Okay, Pradip, thank you very much.
Thank you.
Thank you, Pradip. Bye.